Good evening, everyone. On behalf of the whole Ambala Chartered Accountant Fraternity, I, CA Bindu Bansal, Treasurer Ambala Branch, welcome you all in this webinar on Global Trends in Internal Audit, a look ahead, organized by Internal Audit Standards Board of ICAI and hosted by Ambala Branch of NIRC of the ICAI. Now, members attending this program may claim 3 unstructured CPERs at the conclusion of the program. Friends, the word CA, Chartered Accountant, can be very well associated with alertness, vigilance, watchfulness, as it is also our motto, Ya Eshu Supteshu Jagrati, one who is awake in those that sleep. And this verse is from Kathopanishad. We all know this, but every time we need to remind ourselves. And it was given by Sri Aurobindo in the year 1949. We don't need to tell everyone about our struggle. The CA prefix says it all. With this note, I would like to invite Chairman CA Nitesh Kumar Gupta, who is the current chairman of Ambala branch of NIRC of the ICAI. Sir, he has a very pleasing personality. He's a very supportive leader and a very good human being. And as a CA, he has the can-do attitude. He has 20 plus years of professional experience, and he has also served as the chairman of the JCI Ambala Central Club in the year 2011. So with great honor, I would like to invite you, sir, to give the opening remarks. Over to you, sir.
Thank you, Bindu ma'am. I am audible?
Yes, sir, you are audible.
Very much. Please go ahead, Nitesh.
I, CA Nitesh Gupta, Chairman Ambala Branch, welcome all of you in this webinar on Global Trends in Internal Audit. I also welcome CA Charanjot Singh Nandaji, CC member एंड चेयरमैन डिजिटल अकाउंटेंट एश्योरेंस बोर्ड। मैं आप सभी का स्वागत करता हूं जिन्होंने अपने बिजी शेड्यूल में से आज के दिन समय निकाला, क्योंकि टैक्स ऑडिट में सारे जने बिजी हैं। मैं आप सभी का स्वागत करता हूं। मैं आई आल्सो वेलकम आवर टुडेस फैकल्टीज सीए गुरविंदर पाल सिंह जी, सीए कविश अग्रवाल जी, सीए आदित्य भट्ट जी, जो हमें आज इंटरनल ऑडिट के बारे में जो ग्लोबल ट्रेंड्स है उनके बारे में बताएंगे। Thank you very much. Over to Bindu ma'am.
Thank you, sir. Thank you for your kind opening remarks. And now, अब चलते हैं उनकी तरफ जिनके बारे में जितना बोला जाए उतना कम है। CA Charanjot Singh Nanda ji. He is a Central Council member, ICAI, and Chairman of Internal Audit Standards Board of ICAI. He is also chairman of Digital Accounting and Assurance Board. He is also vice chairman of the Banking, Financial Services and Insurance Commission. Sir, आपके बारे में last time मैंने कुछ बोला था, but अभी मैं ये कहना चाहूँगी, for you, CA means the charismatic amalgamation of the great experiences of life. और अब आपके बारे में सिर्फ इतना बोलूँगी, अब हम आपकी बायोपिक की वेट कर रहे हैं कि कब आपकी बायोपिक बने और हम लोग सब उसको देखें और उससे बहुत कुछ सीखें. So now I would like to invite on virtual stage CA Charanjot Singh Ji Nanda for his keynote session. Let's give a big round of applause. Over to you, sir.
A very good evening, ladies and gentlemen. The host chairman of today's branch, Ambala, CA Nitesh Kumar Gupta. The moderator of today's session, CA Bindu Bansal ji, who is the treasurer of Ambala branch. The revered speakers of the day who are present here, CA Gurvinder Singh, CA Kavish Agarwal ji. I can also see three officials from Inter-Audit Standard Board here, CA Aarti Bansal Secretary, Madam Shivani Nigam, Madam Surbhi Tyagi, Ayaz from the technical support team, and all who have come here to go home unenlightened. At the outset, I wish to express my unconditional apologies for the fact that my video is not working. There's a lot of raining in Delhi, and probably there is some problem in the bandwidth, and they said you can go with the audio. I said, thank you so much that I'm going with the audio. So, ladies and gentlemen, Today's webinar on global trends and internal audit, a look ahead, is the basic series on which we are propagating. We have today, the first session is by CA Gurinder Pal Singh on art of internal audit report writing, which again is a very pertinent requirement when you write or undertake audits. You take audits, but when it comes to reporting, we at times tend to either write more or write less. It is not appropriate. And when the issue comes before the disciplinary committee, there the value of report becomes imminent and the working paper. There is a separate standard on documentation, standard on internal audit. So these will always guide you how we have to go ahead. The second speaker of the day is CA Kavish Agarwal, who happens to be Chief General Manager of DK Paper Limited. He is a man with great experience, great involvement, indulgence, and you would see that his real life experiences would guide the practicing units to move ahead in the right direction. C. Aditya Bhatt is the third speaker, who is the Managing Director, Risk of SR Capital Advisory India Private Limited. And he would take a very unique topic, risk to resilience. Ladies and gentlemen, I would like to say one thing very candidly, that ultimately, when you work in any system, in any tandem, you will start understanding that people who have performed in life are people who have worked hard and researched in their respective fields. So give me a second, I'll put on my PPT and then I'll go on my keynote address. Give me a second, please. Yeah. So when you do anything, the most important thing which is required from you, which is expected of you, is to determine your purpose. If you are aware of your purpose, there is no looking back, because every communication is made once you understand your purpose. So you have to have empathy towards the auditees and understanding of their challenges. Internal audit essentially is a management function, and therefore internal audit can be termed as a third line of defense and is in easier position vis-a-vis identification of issues. And therefore, you are aware that internal audit has no other responsibility, no other operational responsibility, but to bring out certain issues, bring out certain loopholes in the processes which are followed by the management. Focus on process and process improvement, not on people. Very, very important. You all know that the common intent of both auditor and auditee has to be the prevention of reoccurrence of issues. Hence, the processes have to be very, very strong. If the processes are weak at any level, I can say only one thing, that things will not fall in the desired directions. Second, internal auditor do not need to address people issues. It has to only address issues related to process or process improvement. People issues like competency and integrity is the call of the management, like risk. We speak of risk, but risk, essentially the appetite of the risk is either of the audit committee or the board, and the auditor has to ensure that the appetite is well carried on. You have to develop a structure to present the information. Now, how do you present the structure? You need to document the issue, and the issue must have the following components. Number one, observations. Auditor's point of view is very important. Number two, management response, auditor's point of view. Number three, root cause, where you have to have the consensus between auditors and auditor's point of view. Recommendation, action plan with timeline. Yes, how you have to close the issue and in what timeline needs to be clearly specified. Risk rating, yes, it has to be consensus between the auditors and auditor's point of view. For example, it can be high risk, medium risk, low risk. Risk categorization, it is optional whether it is a strategic risk, whether it is an operational risk, financial reporting and compliance risk. And the most important thing at the end, although it is optional, is root cause categorization, again on the lines of the strategy, the structure, the process, the technology, and people. And more importantly, when you go ahead, you have to write the scope limitation to be called for. In COVID, we saw that number of people could not give proper documents. You could not visit the client's office. So scope limitation has to be clearly specified. In the report, you need to document the agreed scope of work, and you have to write the information which has not received as the scope limitation. Now we come on to the second session, and it is largely on standards on internal audit, SIA 110, nature of assurance. It identifies the objectives of two types of assurance: assignments and internal auditor is permitted to perform. I want to tell you that it is only here in Institute of Chartered Accountants of India where you do this. Internationally, you can't give any limited assurance. You have to give reasonable assurance or no assurance. But if we don't get proper documents, proper support, if we get everything, we can always go ahead and give reasonable assurance. But if we don't get proper documents, if we are not able to put ourselves in the right perspective, we give limited assurance. And that limited assurance is something that will change the entire thought process. Now, expectation from you and deliverable when you come to fraud investigation. You have to understand, servicing a client is a very complex process because you have to have high abilities to meet the client's expectations. There should be no expectation gap there. You have to meet timelines, have trust and quality so that you are able to perform to the highest level. You have to avoid unrealistic client expectations and ensure that engagement letters are signed so that both the expectations are well pelled down. You have to do budgeting litigation and visit to investigating officers' cost. And more importantly, quality audit require you have to develop the audits SOP for each client using open source tools and other technology tools for investigation. When you come to investigation, every area where you focus, you have to bring down evidences which are admissible in the court of law. Synchronization of work is again very important, which includes assessing scope, audit program, audit teams, audit process, record keeping, opinion and certificates. Everything is very important because ultimately it has to go ahead for litigation and that has to be presented before the court or any legal enumerary which will decide the final outcome. Now, what are the emerging areas in investigation? You are aware of ASM, agencies for specialized monitoring, forensics and transaction audit in case of IBC issues. Second, there are investigations in RERA, GST, insurance, insider trading, and FEMA. Your board, DAB, I am the chairman of DAB, also we did a program for GST intelligence in Delhi. Outsourced process in supply chain. What is the outsourced process that needs to be viewed in a very serious note? Emerging technology risks like cybersecurity, online payment, data integrity, etc. Money, anti-money laundering and trade finance transactions, they again need a lot of investigations so as to bring out any changes, any movements from the well-defined areas. Due diligence, takeovers, assessing related party transactions, promoter interests. Moving ahead, you have to go for financial statement analysis as a part of your company research, anti-bribery, intellectual property rights investigations, which are very common and are ultimately a great source for chartered accountants who are in practice. Supporting legal firms, resolution professionals, liquidators, asset search, NCLT, because we have a great experience when that experience ultimately puts us as a partner where we start putting things. I want to tell you, ladies and gentlemen, if you intend to work in a greater parlance, you need to understand what is the area where you need to focus on. The third topic is risk to resilience and how. You have to understand that continuing auditing program with 100% coverage of high risk areas. Technology gives us three benefits. Number one, no sampling. Total data is being subjected to audit. Number two, low cost. And number three, 100% error-free output. Very, very important. Integrated virtual workforce resulting in 30% cost reduction annually. Yes, costs are reducing because now you are having virtual workforce and you have larger time to work on. Harmonize risk and controls inventory across three lines of defense so that you are able to work in an area where the outcome is totally crystalline with the objectives of the audit committee or the board. Agile audit methodology, which enables data-driven exception-based reviews. I did a program last week for SAFA, Southern Asian Federation of Accountants, which has 9 countries. I'm chairing the IT committee of that, and we did a program on Agile audit where people from all 9 countries, we had a huge viewership. So Agile audit is using technology for bringing down the audit and yet leaving nothing to chance. The processes are followed. the samples are removed and 100% data is being taken into account. Repeatable methods to scale analytics and automation. So we have to get automated so that where the work can be done by a robot, robotics should help rather than engaging people onto this issue. So I'm really thankful to all of you for giving me a patient hearing. I'm done with my PPT. So I'll just come back to you. Give me a second. Yes, I have come back. And I would like to tell you that today it is raining so much in Delhi that I'm reminded of a couplet which says that after rains are gone, again if rain comes, they say, जाने कौन रह गया था भीगने से शहर में, जाने कौन रह गया था भीगने से शहर में, जिसके लिए लौटती हैं रह रह कर बारिशें फिर से. The rains are coming again. The entire country had thought that we have all relaxed, monsoon is gone, but now it is coming with such level that in Gurgaon it is red alert, in Delhi it is yellow alert, and we all are facing the problems of a rainy day. But I remember the nursery rhyme which says, rain, rain, come again some other day. Today, relieve us. Let us work today. Thank you. Thanks a lot for giving me this opportunity. Binduji, the dice is all yours now. Please go ahead.
Thank you, sir. And मुझे भी अब ये कहना पड़ेगा, अब सब भीग चुके हैं. Everybody is wet now. There is no one left. And thank you, sir, for briefing all the speakers and all what they are going to speak. जैसा आपने बोला कि determine your purpose before any communication. So you have explained the purpose of today's webinar. And now let us move towards the real heroes of the webinar today. And we have 3 heroes, starting with, we have CA Gurvinder Palji, and he will be the first speaker for today, and he will be speaking on the art of internal audit, report writing. He is a young and dynamic person with 14 plus years experience. He is an expert in financial and operational audits, business process engineering, enterprise risk management, data mining, and amalgamation. Now for him, CA means challenge it and achieve it. Let us also imbibe some knowledge from his session. Not only some knowledge, we'll imbibe a lot of knowledge from his session. And with this note, I would like to invite CA Gurvinder Pal Singh. First of all, I would like to say one thing, that anybody has any question, they can put their questions and it will be taken towards the end of the session. So it is my pleasure to invite you, sir, to come on the dais and explain whatever and make us an artist, because it is an art of internal audit. So let us all be the artist. Over to you, sir.
Thank you, Binduji, for the kind words. And as you mentioned that challenge it and accept it. So that's the nature of all the auditors. They all take the challenge and have to come up with the expectations of the management, of the CXOs, and everyone. So thank you for your introduction. And so now today's topic for discussion is the art of internal audit report writing. Let me share my screen. Yeah, I hope is it visible?
Yes, it is visible.
Yeah. So
very much. Go ahead, Surinder Balji. Very much visible.
Thank you, sir.
You need to show the full screen because slides are also available. Site.
Okay.
Yes, now it's perfect.
Yeah. So why do I call it as an art of internal audit? Whenever we write an internal audit report, it is written by individuals, and individuals cannot be driven by a set of coding or something like that. It could be a predefined output. Every individual has its own style of writing. But when I say we have a set of style of writing, we need to be careful of the fact that when we are reporting an issue, reporting anything that we are spelling it out, it has to be guided by certain codes, certain I would say the framework that we deliver. So the contents that I would be covering here would be overview for internal audit report. Then how do we capture the scope, approach, and the objective of internal audit? Then drafting an audit executive summary. What all observations we should take into consideration while drafting the internal audit report executive summary. And then last point, the most important, when we write an observation, how should we capture it? What elements should be there in the audit observation? What precautions we should take while defining the root cause, implications, and most important, what all should we capture while obtaining the management comments? So just to begin with, I'm sharing some quotes with you. As John Powell said, that communication works for those who work at it. So similarly for auditors, internal auditors, we are as good as our reports are. So we need to constantly upgrade ourselves to make sure that the delivery, the outcome that we are presenting to the management, to the senior personnel, is at a level that they expect. And as Rich Simmons also rightly said, that communication is only effective when we communicate in a way that is meaningful to the recipient, not ourselves. So that is what I was saying, that the audience that is involved for internal audit reports are the management, the senior management, the CMDs, the promoters, the CFOs, CEOs, the statutory auditors, the regulators. Now, when we are writing a report, it has to be in a manner that is clear. The message is coming out very clearly. It has to be crisp. It cannot be a lengthy report that is going in circles, and it has to be accurate in terms of facts that we mention. And as last point, as Sir Winston Churchill said, that this report by its very length defends itself against the risk of being read. The most important thing is that while we write the report, since the audience involved are very, very senior professionals who have experience in their respective fields of ages, decades, I would say, who would be reading our report. So we have to make sure that we value their time. We present them only those aspects which would be relevant to them and which would be in a manner that are presented in a concise format, so that they can quickly grasp the issue, understand the issue, and then probably suggest us how they can remediate it, or they can correct those issues. The more lengthier the report, the interest of the audience start losing around it. Now, next slide is what actually is internal audit report. Now, we all do internal audit, and the final outcome of all our hard work that we do during the audit is the internal audit report. It's the processes that we review. It could be financial processes, it could be operational processes, it could be certain legal and compliance reviews that we do. Accumulating all those processes and then preparing a final internal audit report, summarizing all the issues, summarizing all the root causes, recommendations, and taking management comments on of those is what is all about an internal audit report. It is actually, I would say, a report card for our performance, how well we have done, not in terms of how many issues we have found. That when I was doing the articleship, and at that time internal audit was always said to be as a barometer, that how many observations you find is a measure of success. But that's kind of I would say, yes, a fact, but then how diligently we do the audit and how diligently we present it. Not all processes will have observations. Critical observations. How we report that we have reviewed the entire process, how we have reviewed the controls around those processes and evaluated the risk around it. And it's okay to say that we didn't find any observation. There's no hard stopping. I had seen many reports when I was doing the audit with the US counterparts. It's a nil report, but they very well mention the fact that they have audited all the process areas, all the relevant controls, and then they come on a conclusion that the controls are operating satisfactorily. Then next point is, it contains a clear written expression of significant findings and recommendation. Now it's mentioned as significant findings. Why only significant findings? Because, as I said previously, that the audience for internal audit report is people who have experience of more than 20 years, 15, 20 years. All are masters in their own respective field. So we would like to present them the significant findings that impact at at an organization level, which would be a matter of concern to them and which would require immediate attention of theirs to sort those things out. So that's very important. There are certain issues that we note during the audit, which are kind of improvement opportunities, which may not have a material significance or may not have kind of impact that is to be categorized as significant. So they can be termed as improvement opportunities. Maybe we can present it separately as a management one pager report, or maybe at the end of the report we can say that while doing the audit we have found these things. But a detailed explanation of significant findings and mentioning recommendation is what is required while doing the internal audit and preparing the report around it. And the last point was findings of internal audit are based on the review of policies, process, risk controls, transaction processing for the specific processes that we do. So it's an accumulation of all the things that we do during an audit, all the processes, procure to pay, order to cash, accumulate it and prepare it and present it in the audit report. Now, internal audit distribution list. Typically, internal audit distribution list is circulated to business heads, whose processes have been reviewed. So, for example, if we have reviewed a procure to pay audit, so it would be delivered first to procurement head to seek his inputs around the report that we have prepared, the comments that we sought for in the report for the observations that we have noted. Then next would be CEO, CFO, company promoters who would be interested in the report because they want to understand that how the company specific process is progressing. Is it as per the expectations of the promoters? Is it as per the expectations of the regulators? Is it as per the expectations of the stakeholders? If it's a listed company, then all the things, disclosures and everything is being done as per the SEBI guidelines and everything. So that's where CEOs, CFOs, and promoters and other top level management personnel are involved in that. Then the next is audit committee. As an internal auditor, we report our reports to the audit committee. So the chairman of the audit committee and the other independent directors in the audit committee are kind of interested in our report because they get an independent assessment of the processes within the company. While they look at the financial figures in the statutory audit, but it is also very important that they know that the background on which financial figures have been derived have been actually performed in a way that is actually expected to be performed of them. And then the last readers are the regulators and the statutory auditors, because today's internal audit reports have gained a lot of significance, and a lot of regulators read through the report, read through the observations that we have highlighted in the audit report. And that is why I say it becomes very, very important that the choice of words that we use, the kind of language that we use in the internal audit report has to be very, very clear, factually correct, and interpreted in a one single way. It should not have two meanings, or kind of saying that things are happening but they are not happening. So these things should not be there, because the stakes are very high when it comes to the report, the reading list. Scope and approach of the audit. Now, how do we progress the audit? So at the beginning of the assignment, we have an engagement letter signed with the management, wherein we define the scope, what all areas would we be covering. Typical scope areas, I would say, in a setup while doing an internal audit of a company would be, in today's scenario, it would be financial process, finance and accounts, procure to pay, order to cash, human resources, manufacturing, inventory, compliance reviews, and any specific like CSR or any specific other review like scrap review or health safety review as per the definition called for by the management and agreed by the auditor. So while reviewing these scope areas, we have to ensure that the topics are covering the efficacy of operations. We are covering in the scope the reliability on the financial numbers, the reportings of those numbers that are being done are actually correct and moving in the balance sheet in the right presentation, as well as in the numbers that there are in the reports. Then assets are safeguarded. If we're doing a procurement audit, if we are doing a capex review, for example, so we would be ensuring that all the assets that are there in the possession of the company are actually safeguarded. They are properly physically verified, tagged, and all those things. And then compliance with laws and regulation. For whatever scope area that we do, there is a set of rules and compliances that we are supposed to follow, so that all compliances have been taken care of in the scope. Approach of the audit. So it's a description of our engagement background, the methodology, how we are going to progress with the internal audit, and the procedures that we are going to perform. Is it going to be a design review? Is it going to be a sample testing, walkthroughs? How we are going to do the audit, and how much assistance of technology we would be doing, and all those stuff. So accumulating those in the approach note. The third aspect is audit period. Now, audit period is, I would say, a small thing that is written in the audit report, but it gains significance when any transaction that is falling just outside the audit period, and we are expected to review, but since it was outside the audit period, so we haven't reviewed it. That's why sometimes it happens that when we present the report to the management, say for example, we have done the audit for April to December, and by the time we are presenting the report to promoters or the CFOs, it's already first week of Feb or second week of Feb. And in January, if there is a critical equipment that has been procured, now while reading the report, the senior management would be stating that why haven't you reviewed that? That would be the first question. So that's where our audit period gains very significance, that we should clearly mention that the audit period was April to December, and there would be transactions that are out of the period, but since we have already completed the audit, and we the report is already out, so we may not have covered it. So that's why audit period gains very significance. While I said that audit period gains significance, even if the management is saying that this transaction has to be done, so it can be taken up separately and it can be audited separately. It is not necessary that we do complete it in this review only and keep this report open, because timely closure of report is very important. So it should be given to the audit committee within the timelines that they anticipate, because they also need time to read and understand the report. So that's why closing of report within the timelines is very important. And if there are certain issues which are falling outside the audit period, we can do a separate quick review for those and then present those review separately to the management. Now, the next part is writing an executive summary. Now, executive summary is one thing that goes to the goes to the senior personnel, to the audit committee. Everybody looks at with interest. So any summary that we prepare, be it an audit report or be it anything, even in the CA final exams that when we do study. So when we prepare a summary, it has to be very crisp, concise, and we make sure that at that time when it is say for example, so if I'm studying a taxation subject, so I'll prepare a summary of key provisions and key the circulars, and just before the exam day I would be able to read those. So it has to be very crisp, concise, and very relevant, that I read and I understand and I learn it quickly. Similar to this is an audit report. It has all the hard work that we have done. If we don't have a good executive summary, if we don't highlight the issues in the right spirit and in the right frame that we are supposed to, then it is kind of losing an interest in the audit. Whole audit, hard work, no matter how much good observations we have found, if we have not presented the executive summary well, so all the hard work that we have done may not be of that use to the senior management. So here is a sample exec summary that we use. It clearly captures an audit observation, what kind of an observation we have noted. Obviously, when we are talking of observation in an executive summary, so we are talking about a high or a critical risk rating exec summary observation that we have noted. Writing down any improvement opportunities or a low risk observation, say for example vouchers not signed by the management. Now that is important, but if there are certain detective controls or other preventive controls in the ERP world, if the management is approving it in the ERP, so this issue is of no relevance, but maybe in SOP if it is written, so we have reported it, may be fine for management but not to be carried in an exec summary report where we are highlighting the critical issues. It tones down the whole effort. The last two observations are very critical, that if they are of lesser relevance or of not a high or a critical finding, then it kinds of tones down the whole exec summary. The good observations that we have presented above gets kind of toned down. So typically we should focus on high risk issues and couple of low moderate risk issues which are impacting the processes of the company as a whole. Then against those observations and audit observations, we should mention a clear, crisp written action plan that what management intends to do. Now, action plan has to be in sync with the observation. It cannot be that we have very often I have seen that then especially in the listed companies, wherever there is a compliance issue that we report as an auditor, the action plan by the management is kind of a defensive thing wherein they mention all the other sections and everything, stating that this was not applicable for us during that period or whatever XYZ things. But based on my experience, what I have learned during my various audit committees that we have presented, it's legal observation or something like that is a very black and white thing. A section, Income Tax Act, GST or any other act that is written, it's a very black and white paper that is written, and it's understanding, it has to be understood by all at a same page. It cannot be that I am understanding law in a different way as per my convenience, and then the other side is understanding the law in a different way as per his convenience. Law is black and white, it is very simple, it is applicable for all, and it has to be same for all. So the action plan should tie with the audit observation. We see when action plans are not in sync, despite our multiple attempts and multiple requests with the management, we are open to write a rejoinder in the audit observation by stating the fact that this is why we think our observation is correct and management should reconsider its action plan, and then we leave it to the discretion of audit committee that this is the rejoinder of our audit observation, that why we think that this should stay and the action plan should be revised by the management. So the crux is that these things should tie audit observation with action plan. Whatever we have written, it has to be in sync with management. Either I should get convinced or I should convince others. Now, if I am convinced, then obviously I need to modify the observation accordingly as per the understanding of the management. I need to modify it accordingly. Or if not, if I am kind of owning it that this observation is correct, then I have to convince others with conviction that this is why I am saying this and this is correct, and your action plan has to be in line with what observation I have suggested, what I have noted and recommendation that I have suggested. Then another column is of risk category. So risk category, typically we highlight the risk in financial, operational, or compliance risk. Now, financial is a risk that any numbers are not reported correctly, or there is an element of I would say increase in sales or decrease in sales, or some kind of numbers being reported are incorrect, numbers are calculated incorrectly or something like that, any impact that is on financial side of things that impacts the balance sheet or P&L is classified as a financial risk. Operational is anything to do with processes. So if we are doing a procure to pay process, vendor selection observation is an operational issue. It may be a financial issue if there are indications of any I would say a lower quotation being given to a vendor or something like that, lower quotation vendor being selected, but it is typically an operational issue that we report. And then the compliance issues, any issues related to regulatory framework, TDS, GST, any operational related, lift licenses, Handicap Act, RERA Act, whatever act, FEMA. So all those acts are classified as compliance issue. Then control rating. So risk rating and control rating. Risk rating, as I said, all high rated issues should be reported, and control rating also should be taken care of, that all the moderate and limited control ratings should be reported along with the risk rating. That helps the, why we capture all these things in a exec summary is basically, to help management, to help the senior professionals understand what we are saying, what is the risk that it carries, and what controls are suggested to improve it, and what's the overall assessment of the audit that we have done. So it's a one-pager exec summary which captures all the effort that we have done in last 1.5 or 2 months or whatever time we have taken to do the audit. Moving on, risk rating. So within the exec summary, as I was just touching upon the fact that high risk rating observations should be captured. What is a high risk rating? That's a very basic question that that's in everybody's minds, that a high risk for me cannot may not be a high risk for a CFO. As an auditor, when I'm doing so, I would think that this is a very high risk, and as a team member of the audit, I would think for a specific area that I am reviewing. So I would think that whatever area I have reviewed, I think that this is the high risk area. But my manager won't think the same way, and then probably the CFO would think it differently. So what typically is a high risk? So any observation that has a high financial implication, now that's very, I think, simple. Any reporting number that's a material discrepancy as a percentage of sale, procurement, cost of sales, whatever. If it's a reasonably high number, say 4%, 5% variance, or maybe higher than that, so that becomes a kind of an issue where it's a high financial has been high financial implication, and it should be reported as a high risk rating. Then any observation with legal implication involving prosecution or a high financial liability. Wherever any deviation from law has been done, and which we think that it should be corrected or it should be done in some way, we should report it. We should tell the implication of it, that there involves certain degree of risk to the company, so you should take appropriate action around it. So that's why it's a high risk thing for everyone. I think second and third have been repeated. So then the moderate risk, any observation that does not fall under high risk rating but is significant enough to be reported as an observation. Now, any point that we have reported a observation wherein there is an indication of fraud is a high risk. If we have found out a fraud, it is a high risk. But if it is an indication of a fraud that it may lead to fraud, but right now we haven't found it, it is a high risk. But if there are some control weaknesses that needs to be fixed, and because of that there can be instances of fraud, but there are alternate controls around it. Say for example, there are detective controls around it, but we haven't developed any preventive controls. So we will classify preventive controls typically as a moderate risk observation. And then low risk observations, as I said earlier, that they should not be reported in exec summary, as it is of a lesser or a no relevance to audit committee or promoters of the company. Then defining the risk category, I think we have already discussed this, that how we categorize the operational, financial, and compliance related issues. So I'll not go into deep for these. Now, while drafting observation in the exec summary, what pointers we should be wary of? Take note of those points. Now, observation should be very concise. Now we have to be very, very choosy for the words that we use, because it is a very, we have to present the whole exec summary in one page. Now, if we are presenting the whole exec summary for the whole audit that we have done for 1.5 2 months, the observations, the facts, and everything, it typically runs through our emotions, and we kind of write a detailed summary. But while presenting exec summary, we have to be very choosy for the words. They should be as limited as we could. It has to be one sentence. If we are exceeding one sentence, then probably it is not recommended, but there may be one of exception, that to explain better we need to write 2 sentences at max, but we should not cross more than one sentence. Then it should only include observations mentioned in the detailed report. We should not capture anything that is not mentioned in the detailed report. That may be part of any review that we are undertaking and that we think is under process, but we should refrain from reporting it in an exec summary or something like that, to sensationalize the report. Everything that is coming in exec summary should flow from the previous the observation section, whatever reports, what are observations we have noted. And while writing the observation, focus should be on the improvement in processes. When we write the report, typically we focus on highlighting the fact that the management has not done this or management has not done that. But if we read these kind of sentences, or the management reads that kind of sentences, the feedback comes that if you say that there are 10 things that management has not done, so tell us that what all things management has done. We are running a company, and that is doing fairly good business. So I understand that we are having certain control weaknesses, but saying that we haven't done anything, so that gives a very wrong impression. We should always mention that what all controls need to be enhanced, what all control needs to be put in place in the specific processes that we have reviewed. And last point, similar to previous one, the tone of observation should be positive. Use of negative words should be avoided. Encourage writing, there exists a need to enhance controls, or enhanced controls are required. Reconciliation controls need to be built. Segregation of duties needs to be enhanced. Using these kind of words, rather than mentioning that there exist no controls for segregation of duties. Reconciliation controls are not in order, or something like that. So just not making just not sensationalizing the issue, but just toning it to say that we understand that management is doing and putting in a hard work, but we think that there is a need of improving certain areas in the processes that we are suggesting. Now, the most important part of drafting an observation. Here's the sample observation. What all we should capture in the sample in the observation. This has been highlighted by Charanjot Singh Nanda sir, that we should clearly define the issue. What all we have done, what all areas we have reviewed, and based on our review and study of facts, what is the issue that we have noted. What's the root cause of that issue? Why this issue has happened. Most important thing is the root cause, because till the time we don't hit the root cause, we are far from our observation. And then the impact of that, the issue that we have reported. Now, the impact could be legal, financial, operational, whatever. So we have to carefully draft that implication. Recommendation. Now, why I said root cause is important, because till the time we fix the root cause, we find the root cause properly, we will not be in a position to write a recommendation. Our recommendations would be vague if we don't know the root cause of the observation. The recommendation is the most important part. As a consultant, as a management support arm, management consultant, management looks us as a function that is providing an independent objective assurance and also suggesting us the ways of improving, because we have done the audit in a detailed way, so we are aware of the fact that how the company operations are run. So they look at us and they want us a recommendation that is practically implementable and a solution oriented that can be implemented by the management. Then the next section is a management response. The most important, that management is agreeing to the observation that we have noted, the root cause is being agreed on, and the management response has two more critical aspects. Who is the person responsible for fixing the issue that we have noted, and by what date it needs to be fixed. So these are the elements of management response that I'll just touch upon. Now, just an overview and summary of what we have discussed, the 5 C's of observation, criteria, condition, cause, corrective action, and consequence. So this is all what we have discussed just in the previous slide, that criteria is what is the standard that was to be met, and that the company policies, procedures that was to be met, that hasn't met. Then what is the particular problem that has been identified? It has to be a condition that what were we evaluating, and what was the problem that we noted while reviewing the criteria. And then most important part is the root cause, that why actually did that problem occur, and what's the consequence of this problem. And last, once we know that why this problem has occurred, so what is management going to do about it, what have they agreed to do, and by when they are planning to complete it. Now, this point of drafting and observation. So these are just, I would say, based on my experience, I have tried to capture it, that how or what kind of observation we should capture. And again, going back to the topic, that art of internal audit report writing. So it's a totally human to human this thing, that how we capture the observations and how we present it. But just the guidelines around this observation, that while we drafting it, title of observation should be in a positive tone, because that's the first thing that is being looked at by anyone in the report. So if it's a positive tone, the report will be taken in a positive spirit. I'm not saying that we should tone down the issue, but I'm just mentioning that mentioning use of positive words rather than the negative words in the observation. Then facts mentioned in the observation should be accurate. There is no ambiguity in factual accuracies, and unverifiable claims should be avoided. Now, while we do the audit, we do data analysis, we do review of registers, reports, lot of things, and there has to be degree of certainty in the facts that we report. Now, one thing is that we can say that recommendation can be a person to person specific, but factually accurate numbers have to be correct for you, for me, for everyone. If the sales figure are 10 CR, so it has to be 10 CR for you, it has to be 10 CR for me. If exceptions that I have noted are 5 CR, so it has to be agreed by the everyone that yes, the exceptions are 5 CR. So that's where the facts that we are presenting, the team who is working has to be doubly sure, has to ensure that all the numbers, all the reports that we have taken are correct. The reports are talking to each other. It is not that one report is stating sales as 5 CR and the other incorrect report that we have extracted, it is stating as 4.5 CR. We have to ensure the accuracy of the report, because it's a very and the stakeholders are very senior professionals who are involved in reading the report. So any kind of factual inaccuracy kinds of sets off the tone of the whole audit report. And unverifiable claims, if we haven't verified it, so we should not sensationalize it. we should not mention that anything that we have heard during the gossip or something like that, which we couldn't audit, but we know that this thing is happening because we heard two senior person talking about it. So these claims should be avoided mentioning in the report. We should not capture these kind of things. Observation should focus on people, process, or technology. Now, all the observations that we write are either due to a gap in a people understanding who are doing the process review, or is it non-compliance to a process, or need for an upgradation of technology. And in the first line of the observation, again, we should mention that what kind of improvement are we looking while doing the while reporting this issue. And last point is, whenever required a detailed annexure, which should be properly formatted, readable, capturing only those columns that are relevant. We don't need to paste the whole report into the annexure. We need to clean out the report. So if we are for example, we are reporting an issue of open purchase order. I say open purchase order is not an issue, but if we are reporting something, discrepancies in an open purchase order, we don't need to paste the whole report taken out from ERP in the same way. We should capture only relevant columns, because we have a limited space in any Microsoft Word or a PowerPoint that we are presenting. So we should make sure that the annexure that we are mentioning is readable. When we take the printout, it should be legitimate, readable, properly formatted, left right aligned. And if there are significantly high number of transactions which runs into 5-6 pages or something like that, then it's fine to indicate only the illustrative list rather than the complete list. Maybe 10 top 15 points that we want to share. Since the time is less, I'll just quickly run through the other part, defining the root cause and the implication. Now, root cause, as I said, is very critical for the whole report writing, whole observation writing. And while defining the root cause, we have to say why 3 times. That's the golden rule. We should ask why this has happened. For example, open purchase orders. So why open purchase orders? Open purchase order because of people laxity, or because of some genuine things that have happened. The genuine things are okay, but people laxity not okay. Then is it an issue that the order has come but it has not been entered? Then why this has happened? So typically we go to 3 times. We ask the question why, answer to one, and then go back to the second why, then go back to the third why, and that's where the exact root cause lies. So as an internal auditor, we should be we should be ensuring that at least we are asking 3 questions. Typically, or traditionally it was 5 whys, but it becomes sometimes very difficult. So typically 3 whys, we are close to the observation that we have to report is good enough. Then implication, we have discussed in the exec summary, as we have discussed that anything that is going to have an effect in future, maybe a loss of revenue, increased expenditure, any future liability, any regulatory non-compliance, or any operational inefficiencies, that needs to be captured in the implication side. Recommendations. Now, while writing recommendation, as I said that it should be practically implementable thing that we are recommending. It should not be that we mention that if a report is not coming out properly, so we cannot mention that you change the ERP and get a better ERP. Get a practically implementable thing, because in ERP would cost more. In cost of the ERP would be in crores. So we need to ensure that what we are suggesting to the management is practically implementable, is actionable. If there are if there is one person in accounts, and we know it's a small setup, we cannot say that hire 2 more people to make sure there is segregation of duties, there is maker checker and all those things. We have to think of alternate controls. We have to think of people within the organization who can perform those segregation of help doing the segregation of duties and all those things. Then last point is management comments. So management comments, again, as we discussed, all management comments should be in sync of the observation. They should not be talking if we are talking east, so they should also be talking east. They should not be talking west. And it should define the future course of action that will lead to minimizing such instances. Very often I have read management comments as, noted for compliance. Now, as an auditor, we may take it, but when we take to the audit committee, the audit committee will never take this, noted for compliance. And so that's why we say that management comments have to be written in a way that is acceptable to the auditor, and that is in right spirit for the whole company. And who has to do it, that is very important, because now we have noted an observation, and it's a company of where there are hundreds of HODs. If we don't mention the person who is responsible, the designation of the person who is responsible, when we do the action taken report, there would be a blame game, though no, this was not required to be done by us. So that is why it is very important to capture who is the responsible person, who is responsible for fixing this management comment. Time frame for taking appropriate corrective action, again very important thing. And I would just give you a quick example of one of the audit committees that I was part of in my initial days. So management had written all action this time frame for correcting an action for all the observations. It was 25th December. Now the audit chairman, internal audit chairman, the audit committee chairman, he pointed out, but the heavens are not going to fall on 25th December, and some fairy will not come and implement all the observations. So he kind of reprimanded the management for that. What will you wait? We are sitting in October, and why you want to wait till 25th December, and then on one fine day everything will be corrected. So that's why time frame has to be kind of agreeable by the auditor, management, and it has to be reasonable. It cannot be just for the heck of putting a timeline. We put all the dates as 25th December, 31st December, or whatever, or 31st March, and everything would be corrected on 31st March when the balance sheet is signed and everything is gone. So time frame is very important, and it has to be challenged by the auditor while capturing the management comments before pressing the send button. So most important thing, because again, the stakeholders are of high significance. So make sure that certain elements, that the report meets its purpose, the information that we are communicating is relevant for the target users, sections, subsections are all properly logically related and correctly headed. Most importantly, correctly headed. Every sentence has been checked for spelling, grammar, verbosity, clarity. While writing a report, we tend to overflow in the emotions and kind of write and repeatedly write same line in a different direct voice, and then same line in an indirect voice while closing the observation. So finally, before sending the report, we should go through the report once again and make sure that the sentence has been checked for, and the grammar and verbosity, and everything is clear around it, and conclusion has been drawn down naturally, and recommendation is practically applicable for the entity. This is it. So that's all for my presentation, and any questions that you may have, you can raise it at the forum, and then probably we can take it in the end, or probably if required, I can email you the replies if if any of the questions are left to. So Binduji, it's over to you.
Thank you, CA Devinder Singh, and it was really a wonderful session. And as you told, that individuals cannot be driven by predetermined standards, really, because everybody has an artist in him, and they need to prove their own skills.
Yes.
And the positive, it was really very positively delivered by you. जैसे आपने बोला, positive tone होना बहुत जरूरी है. और I would like to mention something, जैसे कोई restless अगर feel कर रहा है, and we say that don't be restless. Now it doesn't mean that 2 negative will become positive. Minus minus 2 plus नहीं हो जाएंगे. But if we, instead of that, if we say just calm down, so that will have a more positive impact. और जो आपने बोला कि from the very beginning, from the title and till the end, that the before sending जो आपने 5 points बोले to review yourself, that is also very important. And I would like to quote something here. When I was giving my exams, जब कभी college और school के exams देते थे, तो मैथ्स में आई यूज टू स्कोर 100, बट वो 5 मार्क्स 95 आते, 5 तब आते जब उसको मैं पूरा रिवाइज कर लेती, एंड आई वुड have pinpointed the mistakes that I have made. So that 5 marks were very important to make it 100. So you just nailed it down, and really it was very wonderful. And बहुत सबको बहुत इससे benefit मिला होगा. And thank you, sir. Thanks a lot.
Thank you.
Now let us move towards the second speaker for today's webinar, CA Kavish Agarwal, who will be speaking on fraud investigation. CA Kavish Agarwal is Chief General Manager in JK Papers Limited, and he has 22 plus years of experience in governance, risk management, internal controls, fraud risk assessment, and investigation. He has excellent communication, training, and problem-solving skills. So he is here to train us and help us to solve our problems. And for him, CA is not just a qualification. It is the pride and dignity of his life. So over to you, CA Kavish Agarwal, and let us give a big round of applause and invite him on the virtual stage. Over to you, sir.
Hello, good evening, everyone. Thank you, Binduji, for such a nice introduction. I would like first to thank Charanjot Singh ji for giving me this opportunity. I would also like to thank my good friend Chetan Thakkar ji for introducing me to this chapter and for this session. Fraud investigation and techniques. So let me take you first through the fraud definition. My slides are visible. It's not moving. Okay.
Yes, sir, it's visible.
Yeah. So what is fraud, friends? Fraud is basically refers to deception that is intentional and caused by an employee or an organization for a personal gain. So here two things are very pertinent. One is for anything wrongdoing or mistake or any loss to the company, if it needs to be defined in a category of fraud, there needs to be two elements attached to it. One is intentional and second is personal gain. So the person who is committing a fraud or a person or an employee during his course of business, he may commit certain mistakes, but that need not to be termed as a fraud until unless he has done this particular activity or act intentionally and to gain something out of it as a personal gain. Unless these two elements are present, any mistake or any wrongdoing or any loss to the company cannot be categorized in terms of fraud. There is a very senior analyst, Cressy, who has defined fraud, the categorized into fraud triangle, which is like US based consultant Cressy. He has defined fraud triangle, basically the reasons behind how individuals' decisions commit fraud. This triangle is categorized like into three components. One is opportunity, pressure or incentive, or and third is rationalization. What is opportunity? So opportunity are the basic things, the basic elements wherein a ground, wherein a fraud perpetrator seems to see those circumstances and he tries to take advantage of it. It could be like weak internal controls, poor tone at the top. So the management is not very serious. They do not take actions into certain past frauds which have gone into the organization. Maybe inadequate policies like SOPs are not laid down, procedures are not laid down. There are no defined segregation of duties in the organization. The processes are not well defined. Who will be doing what activity? Who is responsible for certain acts or certain activities? Those are not well defined. So these are all these give a fraud perpetrator to or induce him to commit a fraud. Any employee will not go into a fraud activity or make any mistakes unless he gets that particular breeding ground, which helps him into going unnoticed or going unidentified during his course of wrongdoings. There's another thing like wherein certain pressures come into play. So let's say in sales, the management is very adamant that the sales figures needs to be achieved or certain targets needs to be achieved. So, and there's a bonuses attached to a certain achievement. So that also gives employee certain inducement that, okay, I'm not able to, or these are unrealistic targets or unrealistic production figures which needs to be achieved. And hence I will go and do certain activities which will help me in achieving those numbers. So to show a rosy picture, certain times like financial people, white collar people, they would like to induce or probably like for investors and analyst expectations to meet those expectations or increase their share price in the market. They go and show the rosy picture of the balance sheet. Again, here there is no personal benefit, but then there could be certain senior management who might be involved to show a rosy picture and gain incentives or probably their bonuses attached to it. The third triangle talks about rationalization. Now, what is rationalization? Rationalization is basically when a person commits fraud, he says that, okay, there are other people who are doing it. Why should I not gain out of it? So he takes example of his colleagues or his senior people in the hierarchy who has done something wrong. He came to know about that particular activity, and he also started doing that wrongdoing for a personal benefit, definitely. So these are kind of justifications which generally these fraud perpetrators give after getting caught up. Now I come to like monetary losses from fraud are cannot be defined. Now basically you can always put a particular number to a particular number of loss to a fraud. But the significant full cost is immeasurable. Why it is immeasurable? Because you have lost time, you have lost productivity or reputation, or probably sometimes customer relationship is lost. So financial figures could be determined, but these like reputation loss or customer relationship loss cannot be measured in terms of total loss of fraud. Just for an example, in case of Zomato, wherein there was a viral video went when a Zomato person was eating out of that packet. So why he did that? He might be hungry. He might be induced with the food quality. And for personal gain, like to quench his thirst, he started taking out of a spoon out of that particular packet and going for delivery. Someone clicked that particular video, and the entire Zomato valuation or probably the customer relationship satisfaction gone for a toss in few seconds. So a employee who is doing certain activity in terms of gaining certain personal benefits and then taking company for a ride, that becomes a very sorry figure for any organization. I'll come to like what are types of frauds. They're like fraud can be broadly categorized into three different types. One is asset misappropriation, fraudulent statements, or corruption. Asset misappropriation could be cash, could be non-cash. In cash, it could be like stealing, scheming, forgery, invoice fraud, payroll, or expenses, inflating expenses. Skimming could be like skimming of a credit card. When you go into ATM machine, there are certain softwares are built in to take out the information of your credit card, and then those information, personal informations, are used for committing or siphoning of money from your bank accounts. Non-cash could be like stealing of assets or inventory. Here, I would like to ask a question from each one of you. No need to answer to me directly, but just answer it to yourself. Have you anytime committed a fraud while being in your employment or being a partner into your firm? If your answer is yes, I am with you. If your answer is no, I would like to prove you wrong. Just take a pause and ask a question to yourself. Have you ever committed a fraud within your organization? So if your answer is no, I would like to prove you wrong. Most of you, at least 70, 80% or 90% of this entire gathering must have taken a printout in your office and used for your personal use. Or could be taken out of stationery, a pencil or calculator or something out of the office. So wherein there is an intent which was involved. And again, the printout is for personal use. Could be for your kids' schooling, or could be anything else. Maybe submitting your PAN card as an proof to any of your banking transaction or something else. So that also tends amount to fraud. It is a non-cash and like kind of involving misuse of inventory or assets of the company. Coming to fraudulent statements, like fraudulent statements could be like financial and non-financial. Financial could be like over or understatement of assets or revenue. This is largely in terms of showing a rosy picture to the shareholders or to the banking institutions for gaining loans or advances, or probably inflating your share prices. Non-financial could be like providing false information to the government organization to gain certain contracts, or to gain certain contracts, or probably let's say in case of just a minute. Or let's say in case of this consent, probably for financial consent, you are providing false information to the organization, to the government organization or outside organizations. Third category comes in like corruption, wherein either like there are two categorization into it: conflict of interest or bribery and extortion. Conflict of interest covers like undisclosed personal economic interest, wherein you are entering into a contract. Probably an employee is giving any benefit to any of his relatives on providing a contract to him. So And again, this conflict of interest is not disclosed to the company or to the owners. In bribery and extortion, probably providing or giving kickback or receiving kickbacks or for providing any contracts. Now I'll bring you a very good study by ACFE, which is projecting 7 key warning statements. These are basically behavioral patterns, kind of a red flags, which any fraudsters will depict. So in case if during your course of internal audit, if you happen to come across certain employees who are behaving in certain pattern, which may give you certain key element that, okay, this person or this these set of people might be involved into any kind of fraud. So the top is like living beyond means. If a person is living beyond his own earning, his style of showing off, going into like very high-ended expenses. So there could be a kind of element wherein you can think that, okay, this person could be involved. A person could be in any financial difficulty. His family members or someone is ill. He needs certain money, and probably those kind of things. Any close relationship with a vendor or customer, that is also a kind of an indicator. Maybe some person don't want to lose his control or unwilling to lose his control or share his duties with anyone else. When you go on audit, and if a few people might not be sharing the details or not sharing their work processes or desk procedures, so that could also be an indicator that a person is hiding something and probably maybe involved in certain fraud. A kind of a wheeler dealer attitude. Probably sometimes it happens that you gain out of me and I gain out of you. So just for an example, in sales, a person is inflating his bills and accounts person is gaining out of that or doing that, passing those bills and gaining certain marketing gifts out of from that salesperson. So it could be like a arrangement between both of them, and both of them are happy dealing with each other. It's a kind of a wheeler dealer arrangement. The last is like probably certain family exigencies. I'll come to some indicators of possible fraud. Why? As an internal auditor, when you go for an audit, you look out of for these kind of indicators. If these indicators are there, there could be possible that the controls are lapse and fraud could happen. So like lack of employee rotation, lack of segregation of duties, unrealistic sales promotion goals, refuse to take vacations and promotions, unjustifiable sole purchase. So sole purchase means like there would always be sole purchase, like purchase from OEMs, or those can be categorized separately. But if there are like a lot of suppliers are available or players are available in the country, and again those contracts have been given to specific vendors for years together or for on certain personal gains, so those could be areas to look into. A high employee turnover. This again is categorized as an possible fraud indicator. This generally happens sometimes in finance or accounts, where new people join and they find that the processes are not right here, the controls are not built, and they feel certain fishy things going on. And instead of reporting it, or instead of taking that as a challenge, they feel that it is safe to not to be here and find out another job and go out. So could be possible that if there is a high turnover or high employee turnover in certain functions, there could be certain wrongdoing or wrong things going on. So these things are just an indicators wherein as an internal auditor, we need to keep our eyes and ears open whether these indicators are there. If some of these are there, then probably we should start thinking on applying certain techniques of our auditing skills, that you might come across certain frauds in the company. Now, what is in role of an auditor? So as an internal auditor, ideally, first line of defense, the line managers and the functional heads, they are ideally responsible to unearth or to find out any wrongdoings or any frauds which are happening within their scope of area of responsibility. As an internal auditor, we are not responsible to detect all kind of frauds. Definitely, as an internal auditor, we may come across certain process lapses, and we need to be alert towards a kind of a possibility of frauds. As I discussed in my earlier slides, those possibilities, those indicators which are there, that if you find out that those indicators are there, you still need to go in depth and understand if some fishy things are going up. So you need to have sufficient knowledge to evaluate risk of fraud. So we need to go through the processes and definitely evaluate the potential risk of the fraud which might be burning up. We need to be alert to those opportunities, and could also allow which could allow fraud and such control deficiencies. So this will all kind of activities will help us to identify, is there something wrong which is happening. I'll go through like fraud investigation and techniques. What is fraud investigation? Basically, fraud investigation is basically a process to determine whether a fraudulent activity has occurred or not. So when we start a fraud investigation, we need to see or identify whether really something has happened or not. We need to distinguish between intentional or non-intentional activity. We need to differentiate between if a person has got a personal gain or not, and see to it that those things needs to be clearly defined in our investigation process. Basically, our aim is to understand what behavior occurred and who are responsible, who all are participated in that activity, and how it went through, what was the modus operandi, and how it has really impacted the organization in impacted the organization overall. What are the various business processes which lack in internal controls, wherein things needs to be tightened up? What was the financial loss and what is the reputational damage? So objective of fraud investigation is first to identify the improper conduct, identify the persons responsible. Second is impact evaluation. What is the impact of this fraud? How it has really impacted the organization. Either it could be either reputational damage, it could be anything else. How it has really impacted. Then comes a reporting and communication. Reporting and communication, you need to see the stakeholders where you need to publish or not publish these reports, because since these are very confidential things. What are the regulatory or legal requirements of the reporting? And then and the last thing is providing assurance to the management that how do you build in controls so that like in future again such things does not reappear or rehappen. What are the processes needs to be changed, improved, automation needs to be built in, or certain responsibilities or segregation of duties needs to be built in to strengthen the internal controls or weaknesses of the internal controls. I'll take you through certain common initial triggers which have been identified by ECFI in their report in 2022, wherein they have done an entire research on hundreds of countries with the fraud which have been reported. In that, these are the initial triggers which have come in. So the main initial trigger which have come in, like whistleblower or tips which have been received by the management or by an auditor, which has unearthed the fraud. So during your course of internal audit, definitely you come across certain activities, certain things which probably which probably indicates that the frauds are happening, and then you identify that yes, the fraud has really happened. So that has been around like 16% of cases. Internal audit is able to recognize the fraud. In certain like 12% of the cases, like during management review, things have come up and they further investigated and found out that those frauds are happening. During documentation review, around 7% cases have been identified during documentation review. During account reconciliation accident, around 5% of the cases have been identified during account reconciliation accident. However, like pertinent to say here, whistleblower and tips is foremost formidable source of area wherein initial triggers come in, and then those through those triggers investigation starts, and investigators found that the fraud has really happened. In this, I would like to bring in example of Renbexy, wherein erstwhile manager, one of the manager of Renbexy, he is reported to US FDA about certain wrongdoings which were going in his company, and then US FDA triggered audit of Renbexy about their manufacturing facilities and found out a lot of quality issues in their product, which resulted into a fine of almost like $500 million to Renbexy, and Renbexy pleaded guilty in that, and it turned about to be a huge reputational as well as financial loss to the company, which came out from the whistleblower tip. I'll go through like steps of fraud investigation. When you decide to start a fraud investigation, so let's say there is an through initial triggers, you have come across that yes, there's something going on, and you want to further start investigation of that particular area into deep. So these are the 6 steps which probably needs to be followed. One is the first is decide to investigate. When you assess the situation, you interview the reporter, understand what is the gamut of information, whatever information is little or a deep information which is available about that particular incident or activity which is going wrong. If required, take certain interim action. So let's say if you want to remove a person from that particular specific activity or responsibility, you ask him to go on leave or certain thing. In some of the cases, you also may decide to keep it confidential, that no action needs to be taken initially, so that people are not alerted, or the person who is doing it or committing it is not alerted. So you, when you plan an investigation, you need to very specifically determine the scope as well as outline the strategy. So strategy is very important here when you plan your entire investigation, because in case if your strategy is not right, you will not be able to reach to the conclusion, or you will not be able to unearth that fraud, or catch the people red-handed, or identify those perpetrator who has done and how much loss he has brought to the company. So the strategy is very important. You need to make a list of interviews, like which needs to be taken care of, people whom you have to meet. Since you need to keep this very confidential, very specific, people needs to be touched and ask certain questions which may not lead them that you are doing certain investigation. It need to be looked as like a normal internal audit which is going on of certain specific areas, and you're just doing a routine audit. Also, you need to create your timeline, that how you have to go about it. This could be timelines could be changed based on the pace of the information, pace of the activity, your investigation which is going on. So you need to be very flexible about the timelines. However, your strategy should be very focused approach. It needs to be seen that you need to do this fraud investigation in a very fast pace, because and a very confidential manner, since every day if the perpetrator or the fraudster comes to know, he may damage or he may sabotage the information, he may sabotage the evidences, and you will not be able to come to know. So that is very important. So when you review, so the third step is basically reviewing the records. In reviewing the records, you need to take care of reviewing the email records. You can take help of IT to generate all logs, log statements, all emails, past emails, and through help of various audit tools, keyword analysis, search, and you can identify that what all went through. Is there any specific information which is available in the emails or the personal records of you can always take the laptop for a scan, the personal desk for a scan, and then see to it that certain things are available. Obviously, in the person whom you are investigating should not know all these things are going on. Without his knowledge, keeping it into confidential, you need to do all those activities. So reviewing his personal files, or probably reviewing the relevant documents is very important. Once you collect the evidences, so analysis of evidence is very important, and taking care of those evidences, if those are hard-code evidences you have identified, taking care of those evidences, recording it properly, segregating those evidences with regards to numbering it, and keeping it in a right perspective is very important. Once all these 4 steps are done and you have zeroed down on the perpetrator and you have very hardcore evidences which are in place with you, we need to conduct an interview. Now, this interview needs to be planned in a very specific manner. This interview could be a kind of a final nail in the final nail. So probably you need to have one person from legal or HR in that interview, and probably one of the like senior management or maybe his HOD into place. So while this drafting an interview, you need to take care of all the questions which needs to be asked to the person. The questions which needs to be asked should be going from general to specific. So initially you need to start with general questions which may not lead to that specific event which you want to talk about it. So let the interviewer be comfortable in a situation that okay, he is able to share some information. So during that interview you might also come across certain other information which is already not there with you. So with that, probably you need to build a rapport with the interviewer. You need not to harass him or need not to be kind of an interrogation kind of scenario. It needs to be a very professional approach. While doing interview, you can also do a recording, but this recording needs to be as per legal parlance. It needs to be having a consent of the interviewer that you want to record, and there has to be a consent. Only then that interview can be recorded. Otherwise, you will not be able to place that into a legal counsel, because all the fraudsters, when the case goes into legal battle, then these interviews, unless it is with consent recorded properly, you will not be able to produce it in terms of law. So that is very important. Then the last and final thing is like write the investigation report. Now this investigation report, sometimes it could be formal, it could be informal. It all depends on case to case basis and how you want to, or what where you want to report it. Here we need not to use inflammatory language which hurts any person specific or any department. We need not to, we need to clearly specify exact information about the incident which has happened, the case which has happened, where it started, how it went through, what is the modus operandi, and how it has gone through, and how it has resulted or impacted the organization. So here we need not to use various words or jargons or sensationalize that particular thing. We need to be very specific, crisp, clear, crystal, and all these evidences which has been recorded on the case needs to have a chain of custody. So chain of custody needs to be properly taken care of, so as to take it through the legal course in case if it tantamounts to go into that kind of So coming to my last slide, which is like reporting of outcomes. Herein responsibility, like CA is responsible for fraud reporting. Reporting could be oral, written, interim, or final, depending on the audience where you want to report it. If it is to the management, to the board, to the outside legal counsels, or anywhere, so it needs to be drafted in such certain manner, which helps them to understand how and what has happened, and who are the real perpetrators, and you need to be able to prove it in the court of law in case if it is required. So the report should take care of like timeframes, observations, conclusion, and resolutions, and corrective actions to improve the controls. So that is very important. Your report should be legally vetted. Since in case if you take action against any employee, then he may take a legal course. He may challenge the company. He may challenge the investigation which has happened, and probably things may go real wild. So probably those things, the report needs to be having a legal review. And in case if the management feels, then probably it can also go for forensic audit, wherein forensic experts can be called up for scanning the laptops and then taking all sorts of forensic reviews. I think I have already done my bit. And in last, I would like to quote Sir Richard Chambers. He has recently written on his wall, remember, internal auditors, sometimes your audit finds the problem, and sometimes the problem finds your audits. Always keep your door open during an internal audit for someone who wants to whisper something in your ear. So as an internal auditor, we should always keep our eyes and ears open. We should always keep our doors open. We should create a healthy environment for people to come and share something which might be going wrong in the organization. And that may help us in unearthing certain big issues. With that note, thank you all for providing me this opportunity. I would hand over to Ms. Bindu.
Thank you, sir. And what an eye-opening session it was. It was just like, if we want to sleep peacefully, we need to wake up. So it was like that. And yes, you rightly proved all of us wrong, because I also said no. But then later on, when you explained that, yes, we all have been, using these things intentionally, something for our own personal gain. So you proved all of us wrong. And this can also be explained in a way like corruption is not only related to money. If a student who is coming in the class and not paying attention to the teacher, he is also kind of corrupt somewhere. And a teacher who has not prepared the session sincerely, and he's just taking everything for granted, that is also corruption. And even in, if you look in the Patanjali Yoga Sutras, Maharishi Patanjali has also written that we should not be a stealer. And stealing is not only related with money. If we take somebody's credit intentionally for our own personal gain, that is also stealing. So it was very wonderfully explained, and what are the key points where we can just make it, it is kind of an alarm that yes, something fraudulent is happening, and how to detect that, how to overcome that. It was really wonderful. And we'll be taking questions towards the end, sir. It was really great to hear from you. Really an eye-opener session. Thank you, sir. Now moving forward towards our third speaker for today's webinar, CA Aditya Bhatt, who will be speaking on risk to resilience. He has 29 plus years of professional experience, and he is Managing Director, Risk in SR Capital Advisory, India Private Limited. He was Head of Forensic for KPMG in Saudi Arabia between 2015 and 17. He is the recent past president of IIA India 2021 to 22, and now he is a National Council member. And as we all know that resilience is, if we say in a layman language, it is bouncing back or coming back to the original shape. So we'll learn from Sir Aditya Sir that what is the risk of resilience. And for him, the CA profession is not the toughest. It is for them who are the toughest. So CA profession is not that much tough. It is for the people who are tough. And over to you, sir. And we are looking forward to having a wonderful, insightful session from you. Over to you.
Yeah. Thank you, Bindu. Thank you for the kind introduction, and thanks to IASB as well for having me here. It's a long time since I've come on this forum, actually. Okay. A quick check. Is my presentation visible now?
Yes, sir, it is visible.
Perfect. So thank you. Thank you, everyone. So today we are going to talk about the theme actually of today's session is global trend in internal audit, a look ahead. And I've selected the topic risk to resilience. As rightly put, resilience is how do you bounce back after a risk event. And risk is something that you're exposed to a danger, right? So let's move on. Some definitions now. What is risk? Risk is potential of getting hurt and or losing something of value. Values can be gained or lost when taking a risk, right? When you play in a stock market, you're taking a risk. You could win, you could lose. So values can be gained or lost when taking a risk resulting from a given action, activity, or inaction, foreseen or unforeseen. And a combination of risk and uncertainty. Uncertainty is a potential of unpredictable, unmeasurable, and uncontrollable outcome. Risk is a consequence of action taken in spite of uncertainty. So risk can impact what an organization is attempting to accomplish. So if I convert this risk into a business language, so every business has its goals. A risk can impact what an organization attempting to accomplish. Business implements adequate traffic lights, and as internal auditors, our role is to minimize the negative impact of this risk and maximize the positive impact at periodic checkpoints. Now, what are we trying to protect, preserve? Right? Tangible, intangible assets. There are actually 5 categories of assets that we are looking at. Physical assets, which is land, building, equipment, inventories. The financial assets, which are cash, receivables, investments, equity, prepaid, and others. Customer asset. Do we look at our customers as an asset? The customer, the distribution channels, our affiliates. Employer, supplier assets, our employees, suppliers, partners, the various people we have with us, the entire ecosystem. That's also an asset that which we need to protect. Last but not the least are the other organizational assets like the leadership, strategy, knowledge, values, reputation, innovation, system, processes. In fact, 70% of an organization assets are intangibles. 30% is something that you see on balance sheet. 70% is something that is off the balance sheet, which are in form of your reputation, your brand that you carry. A classic example here would be sort of the Tata Group, the Tata Code of Conduct, or the Tata Business Excellence Model. By itself, it has got so much value in it. In risk, internal risk. What are internal risk? Internal risk influences are mostly those that are generated within the organization and can be largely viewed as those that are under the control of an organization. So anything that is internal is within your control. Financial risk, ethics risk, project risk, technology risk, operational risk, health and safety. So these are all within the control. So a good set of processes and procedures will help you minimize the occurrence of this risk. External risk are those that are ever-changing scenarios affecting the operating environment and organization that are beyond the control of the organization. Political risk, economic risk, market risk, legal, environmental, social. In the last couple of years, these are some of the things which we are all seeing, right? Market risk, economic risk. You look at the stock market, look at the war between Ukraine and Russia, look at the tensions between China and Taiwan. Those are everything that has an impact on your organization. It's impacting supply chain, but there's no control. So when you don't have any control on happening of such events, then what do? You try to minimize the impact of that event. So when it's an internal risk, you're trying to minimize the possibility of the risk happening by processes, procedures, systems. And when it comes to an external risk, what you're trying to do is minimize the impact. Now, very important when we're talking about internal audit for the tomorrow, what are we seeing today? Customer demographic are changing. Take India as an example. We have around 140 crores of population. 50% or and nearly 70 crores are at the age 28.5 or below. Only 70 crores are above. And if I increase it from 28.5 age to say 30 to 33, you'll probably have 60-70%. So we are dealing with a young set of customers today. So we have Gen X, Gen Y, Gen Z. Now we have Gen Alpha. So people born after 2012 are Gen Alpha, and they already are roughly 10 years old, and another 8-9 years, and then they become adults, right? So we need to look at the customer demography is changing in India, very young population as compared to say a Japan or a Canada, where the population is aging. So their average age could be 50, 48, maybe even higher in Japan. Customer behaviors and expectations are changing. So what is my requirement today as a Gen X or a Gen X guy is totally different than what is the behavior and expectation of a Gen Z guy or a Generation Alpha. So customer behaviors and expectations are changing, so that needs to be tracked. The olden time of cameras, as an example, are no longer valid. Everybody is now going into digital. The analog cameras have become redundant, right? Because the customer behavior is expected. But maybe my mother would still prefer those cameras because she's not comfortable with the digital camera. Technology innovation is accelerating, transforming every business sector. Now, when I'm talking about technology innovation, we should not confuse it with the way we are doing internal audit, use of technology in internal audit. It's a technology, the manufacturing technologies are also changing. Robots are there everywhere. Robots is in some of the auto companies. Robots do at least 60-70% of the work. It's only 30% of the work which is done by humans. And there are several such industries today where technology innovation is actually taking over what humans used to do. You would have seen several startups in India. Startups are actually proliferating the Indian market, and they're funded by the VCs intending on disrupting business models. So you have seen so many of them. There's multi-billion-dollar investments that were happening. Of course, all of them may not go on to be successful, but some of them will fail. They will fail not because they had a bad idea. They will fail because somebody came out with a better idea. Non-traditional competitors are emerging. Physical classes have all become digital. So you could see the likes of Byju's, Vedantus. They are non-traditional competitors. Uber, Ola, they don't own any taxis, but they are aggregators. So they are non-traditional competitors to, say, for example, a Tab Cab, which was there earlier, or the yellow-black taxis in Bombay. Last but not the least, decoupling of economy due to geopolitical situation. The geopolitical situation today is very, very critical today. With the Ukraine-Russia war, we thought it is going to go down, but it probably is getting escalated. Similarly, China, sort of threatening Taiwan with a lot of their military activities around it. These are cause of concern. What we don't realize, and of course, we have other issues with Iran, Turkey, and I'll come to that in some time. But what is happening between Ukraine and Taiwan? They control at least 85-90% of the microchips that are manufactured. And the semiconductor microchips are something that is required in every electronic gadget that we are using today, whether it be our smart TV, it could be your air conditioning, it could be your car, it could be your mobile phone, it could be your washing machine, dishwasher, you name it, it has a chip in it. Without the chip, they will not function today because they are all smart chips, right? And 80% are manufactured in Taiwan, and 90% of a critical raw material comes from Ukraine, which is the neon gas, which is used in this production. So between the two, they control approximately 85-90%. So if those countries go under because of geopolitical situation, the entire world will come to a standstill. So these are some of the latest, innovations that we are looking at. You would have seen these days all over India, in Delhi, in Bombay, we see electric vehicles, we see electric bikes, right? Share bicycle with solar power telematics to monitor usage. Blockchain technology, the very popular, and blockchain is actually going to kill a lot of intermediaries. is going to change how to rent, sell, share. App-based process reengineering and activation, right? You can just enter your home with your showing, just with your fingerprint. There are a lot of smart homes that you have. Drone devices for aerial deliveries and surveillance. While there are restrictions in India, those restrictions will soon go away. So you will probably have your pizza guy delivering you right at your right at your window, or you will have your pharmacist delivering it right at your window. Cryptocurrency, again, acceptable in some countries, not acceptable in some. There are rules and regulations being drafted, but cryptocurrency is the next thing that's going to happen. Analysis of big data to predict consumer purchases. So much data is something that we create that people actually have the ability to predict with big data analysis on how I'm going to behave, what I'm going to say next, what I'm going to buy next. And you would see that, when you get onto Amazon or a Flipkart, the moment you do a particular search, it'll also give you, the other stuff that others have bought along with this product or likely thing to buy or an alternative. So this is based on your the analysis of the big data, specifically something which you have done in the past. Social media and telematics in passenger vehicles. We spoke about it. All the cars are so automatic today. The car can actually tell you, when you fell asleep, are you alert? You're not alert. Where all you're going. So all these messages can be given by a simple chip to the OEMs. And additive 3D printings. Now this is something you would have seen it also. A lot of masks during pandemic being done through 3D printing because of a shortage of manufacturing facilities. You will see homes done through 3D printing soon, and there are a lot of prototypes that are available with 3D printing. So these are all that are going to disrupt the market. Now, how do we look at it? Do we look at it as a risk that, okay, these events are going to happen and they are going to be redundant, or do we see this as an opportunity? Now, again, we need to answer this from an internal audit perspective, because we have never seen this before. Now, if you've never seen this, how are you going to audit it? So do we now change our role saying, hey, all these too much changes for me, so it's a big risk, so let me change my profession? The answer is no, right? So these are opportunities for us to learn something better. The geopolitical risk, you can see this in Euro-Asia Top Risks 2022 publication. These are the predictions. This is something that is published in Jan of every year and prediction for the year. No zero COVID. So COVID is here to stay. So now we have to work around COVID. Technopolar world. I mean, your data is there everywhere. Okay, a person sitting in the US can create a war in India, or can create tensions in India just because of this access to social media. US midterms. Everybody's carefully watching the midterm elections, that who's going to come into power, because Donald Trump did not give up last time so easily, right? So that's going to be carefully watched, and the entire global economy will move in case we see some change happening there. China at home, US-China relationship. Is it going to improve? Not going to improve? Is Xi Jinping going to go into his third term? These are some of the questions that will be answered very soon. Relationship between US, Russia, Ukraine. This report came in somewhere in Jan when the military was getting built up around the Ukrainian border. But now you see that event actually has happened. Putin decided that has made statement that war should end, but now suddenly over the last couple of days we see more troops being deployed, and the reserve forces also have been called. US-Iran brink of crisis. Iran's nuclear program is advancing rapidly, and that's going to create some tensions in the future. This is a very interesting one. 2 steps greener, 1 step back. Everybody's talking about ESG, everybody's talking about climate change sustainability, everybody's talking about fossil fuels, but this will result in higher energy prices for the consumer, right? And a lot of countries may not be able to afford, because of the recession, higher energy price. So this may take a step back, these initiatives, while all the coal-fired power plants were shut in Europe, or majority of them were shut, but with Russia stopping the gas supply, most of them have fired back their coal. So while they have taken 2 steps to go towards green, now they have taken a step back. Empty lands. United States is no longer interested in playing the role of a global policeman, which they're already doing in Afghanistan. They've gone to Vietnam in the past. Several other places, even Ukraine they've been supplying arms, ammunition, and aid to Ukraine. So they are no longer interested in playing the global policeman role, and Beijing is not going to do that either. Corporate losing the culture war. World's biggest brands are earning record profit, but they're having more difficulty navigating politics. Consumers and employees empowered by the cancel culture enabled by social media. There are new demands coming on multinational corporations. So the government is looking at controlling most of the MNCs on what they do, how they do, where they keep the money, how they should be taxed, whether it is favorable towards the employees, not favorable to the employees, and how do they spend the money navigating the ESG part of it as well. Turkey is in the center of Europe. It connects Asia to Europe, and the way Erdogan is going to behave, or whatever he tries to reverse his plunging poll numbers ahead of the election 2023 is going to be critical. So Turkey, Iran, Russia, all these, China, of course, you can't lose China. All these are very, very critical geopolitical situation that could actually elevate the risk. When you look at the World Economic Forum, the top 10 risks, if you look at the top 5, climate action failure, extreme weather, biodiversity loss, social cohesion erosion, and livelihood crisis. If you wind back 5 years or 10 years, most of the risks were economic. Most of the risks could have been technological, like cyber attack, technology related, loss of profit, economic risk. But today, if you see, most of them are getting into environment, societal, and geopolitical. Now, that's a total different risk sets that have come up. And these are not easy to control. These are not easy to predict as well. When it comes to an economic risk, you can predict a little bit. And of course, you can have a lot of risk mitigation strategies. What do you do for a climate action failure? If it's not going to rain and you don't have, like, look at Saudi Arabia, it doesn't rain there. And let's assume it was landlocked. Then what do they do for water? Luckily, Saudi Arabia is not landlocked, so they can put desalination plants, pull the water from the sea, and then use that water. Similarly, extreme weathers, you've seen, how all the storms and tsunamis have been hitting us over the past several years now. Now, what does that mean to us? Okay, we are humans, right? And there are 6 senses of human. We all know: sight, sound, smell, taste, touch, and the 6th one is gut feel. How? And from a risk management or from internal audit perspective, what do? We need to ensure that all of these are developed in a corporate. So in a personal capacity, we use all of these 6 to take a decision in our day-to-day life, right? So how do we now formalize it when it comes to working with the corporate? So risk management is all about developing these 6 human senses in a corporate. Once developed to an establishment of early warning indicators, business needs to design, implement responses to assess design operating effectiveness on a periodic basis. Similarly, the role of an internal auditor here would be to see whether whatever has been agreed have been designed in the way it was supposed to be designed, and then they're working in the manner it was supposed to work. And as I said, we had Gen X, Gen Y, Gen Z, Gen Alpha. So it's very important to know what are the various generations of internal audit. Just like we have 1G, 2G, 3G, 4G, and now 5G in telecom. Similarly, we have the 5 generations of internal audit as well. When I started, actually, I started my CA in 1993. That's when I started doing my articleship. And that time it was a totally different way of doing internal audit. And I've been doing internal audit and statutory audit, both at that point of time. You start with the existing processes, procedures, control activities, and then you keep auditing the operational effectiveness and compliance. You don't go beyond that. You see what work has been done, and you see that everything is operating effectively based on the actions that they've done. The second generation, which is post 1990s, was control risk-based auditing. So this is something in 93 we started off with. At least I recollect where I was, that we were looking a little bit into this. Start with financial and compliance risk. First, what are the risks? That is, what could go wrong? What should be the control that should be in place? Not saying what the controls are there, but what should have been in place. Then look for what is in place to find a gap, and that gap would be design. And whatever is in place, you then audit it for operational effectiveness and compliance. That was the second generation. Then came the third generation, business risk-based auditing. There, we didn't just go to the risk. We understood the business and the various businesses. It's very important when we understand the businesses. And by business risk, here we mean strategic risk. Then the same process follows. Determine control that should be in place and audit for design. So that doesn't, what changes here is Now you get a thorough understanding of the business. In the past, I could go to a company, look at their SOP processes and start doing an internal audit without even visiting their factory or their plant if it was a manufacturing. Today, unless you understand thoroughly how the business operates, it's very difficult to do. The fourth generation was VRMP. Start with an understanding of the business and the various risks. Determine the capability that should be in place to effectively manage the risk. Audit. So here we took it a step ahead. In first case, we saw whether the processes are in place, whether technology is in place. Now we are seeing whether the right people are in place as well. The right person should do the right job, because several often we see somebody, maybe a good guy, but may not have the right capability. A simple example of the compounder being the doctor, understand what a doctor does, but he cannot play the role of a doctor, right? So he doesn't have that capability or the skill set or the certification or the license to do it. Similarly, in an organization, we then started looking at whether the person is capable enough of performing that role. And now we have the fifth generation, that is post 2010 and analytics based auditing. This is 2010 post, but now we are in 2022. It's moved into continuous auditing and continuous monitoring. Here, the process remains the same. We start with understanding of the business and the various risks. We determine the capabilities that should have been in place to effectively manage. We do process mining and data analytics to identify outliers. So tons and tons of data is available, all technology level. There are various tools, ACL, IDEA, plus bespoke tools are also there where you can actually do an analysis and you can do multiple permutation combination, which may just not be possible to do in an Excel, to identify outliers. And then you audit the outliers and then you come out with exceptions. Then of course, audit for design, operating, effective and compliance, and institutionalize continuous monitoring and continuous auditing. Now, continuous monitoring and continuous auditing is very well prevalent now. Okay, and especially during pandemic, the continuous monitoring part has become even more tougher. Banks always had continuous monitoring, continuous auditing. You think of it, when you go to an ATM and withdraw money, immediately the moment you put your PIN code, the money comes out, there's a message that goes to. That means the continuous monitoring that's happening. And they have fantastic controls. Like I remember once a few years ago, I swiped my credit card in Bombay, and this all happened in a single day. I swiped my credit card probably at 5 o'clock in the morning at Bombay airport. I landed in Delhi. First flight to Delhi, I took 5:50 flight or 5:45 flight. Once I landed in Delhi, I picked up a coffee, I swiped a card. Came back to Bombay for a meeting at the airport and then flew to Bangalore. And late night flight to Hyderabad. So I was in like 4 cities in a single day: Bombay, Delhi, Bangalore, and Hyderabad. And when I reached Hyderabad, my card got blocked because they thought there's some fraud that's happening, that how can one person, and they have my pattern as well. I don't travel so much. So they thought that somebody is actually cloned my card and sort of swiping it at all these 4 locations. I thought that was a fantastic control, and I actually had to call them up to actually unblock my card because it's very critical for me to have my corporate card active. So continuous monitoring, continuous auditing was always prevalent in certain industries, but now it has become in all. Even in a manufacturing, sitting at your look at retail. The security guy can be at home and actually monitor all his stores on his app because you can actually see the cameras everywhere. Similarly, say a power plant. You could have a power plant in a very remote location, but sitting in Bombay, you know exactly the efficiency and the productivity of that plant through your app, because there are a lot of feeds that come in from there directly into your systems. So this is how internal audit has evolved from a passive to a very active role, and purely from a control to business performance. As I said previously, it was very, very passive, detecting and reporting of the problem. Then we went into giving ideas and suggestions on how to prevent, coming up with preventative controls and institutionalizing policies and procedures to ensure there's a maker checker in place. So you give ideas and suggestion. It went one more step ahead. Again, all this happens because data transparency was there. Benchmarking performance of operating process against best practices. I won't say best practices, better practices probably. And now solution. Now the expectations of an internal auditor, you have to wear various hats. Enterprise risk-wide management, facilitator of a positive change. So from compliance auditing, we have moved into internal controls process review. We have moved into operational process reviews because we started understanding the business. And now we are considered as a strategic business partner. So It's for us to bring about this change. It's for us to drive it. If you want to do it very mundane and remain as doing compliance auditor, internal control process, you could choose to. But good companies, better companies, forward-looking companies, they expect internal auditors to be the strategic business partner. So continuous auditing, continuous monitoring, that's the way it's going to go. Allow for opportunities to improve services and business, leverage opportunities, support business processes and improvement, shape culture, and move the organization forward. Other thing of continuous auditing and continuous monitoring, it says leverage opportunities, improve service and business. So what happens is when you see a risk, when you see some sort of a data set, then you see an opportunity how to make use of the risk to make more money in a nice and ethical way, right? So, for example, real estate companies, today you will also notice when you're passing by a particular real estate project, you'll start getting SMSs at that point of time saying that, hey, look at this project. Now, why is it that when you're around a few kilometers, you can do it? Is because of AI, artificial intelligence, where they are able to push through because your location services are on. They know exactly where you're moving. They have your phone number. They know exactly. So this is the place where they're actually leveraging a weakness to see how they can make an opportunity out of it. I won't spend too much time on definition of internal audit. The definitions have changed. Now it's clearly designed to add value, and all the board and the audit committee members are saying, we know that you're mitigating a risk, you're giving us an assurance. At the same time, we expect, because end to end of the business, you have got access to all the data, you need to add value and improve our organizational operations. It also help accomplish its objectives by bringing a systematic, disciplined approach to evaluate and improvement effective risk management, control, and governance. So wherever you see risk management is always there, managing a risk. Objectives are goals, something towards which effort is directed or the end of an action. Relevance of risk depends upon the context of organization strategies and business objectives. So the expectations of an internal auditor, the expectations of IA function is ever increasing because of greater business risk. Technology has advanced tremendously, and we need to understand technology. Globalization of operations. So there's nothing like an Indian company, and the company can operate from anywhere. Your suppliers could be in one country, your customer could be in another country, your manufacturing could be in the third country, and your marketing could be in the fourth country, right? So globalization of operation, rapid expansion, capital is available, and rapid expansion is something that we've seen. Increasing competition, not the traditional competitor, but the non-traditional competitors also coming. So you have to keep scanning the world to see that who else can come and disrupt your business. Speed of change, something that used to take 3 years can now be done in 6 months. Something that used to take 6 months can now be done in 2 days. And fluctuating market demand. So there could be demand in one country, the supply could be in another. It keeps fluctuating. So these are some of the business risks. And so the expectation of internal auditor is to have increased flexibility, add more value, needs to have expertise in technology. So we have to embrace technology. So the days of saying that, resistance to change is only going to make us perish. So we have to adopt newer technology. We should be willing to learn. I did my CA in 97. Prior to that, I'd done my cost accountancy. Then I did my CIA, and now I'm doing my CISA. The only reason I'm doing all these things is to be relevant in the market, to know what new thing is coming. And by doing an educational program or certification, any certification that you do, whether it's online, offline certification, only goes to add to your skill set. Attending programs like this, attending webinars like that gives you a better perspective. Deeper skill set, business risk, process, and be an effective change agent. The benefits is by doing this is, of course, legal compliances are now becoming very, very regimented. The regulator has the ability to catch you real time if you're not in compliance. So legal compliance, adherence to companies' policies and procedures, process improvement, risk management, and of course, cost savings. So if somebody is going to invest ₹1 into you, they would require at least 3 to 4 rupees back from your activities. So what are we? So, there's a famous 4 lines of defense or 3 lines of defense. An internal auditor is typically in the third line of defense. So we don't run the business, but we are very, very critical to the business. So we are like an educator. We are like a facilitator. We are a coordinator. We are an integrator. We are an evaluator. We are an advisor. We are a mentor. We are a guide. Various names you can give. Various, you can be creative, but this is what we are. We actually don't do. We are not the first line of defense, which are normally the CXO category, the CEO, the chief marketing officer. They are the ones who are facing the third party. So as an internal auditor, we provide assurance that the management uses an effective process to identify. We provide assurance on the key risks in the organization, business unit, and whether the organization is responding in accordance with overall business objectives. We provide advice on areas in organization where responses to risk are not sufficient. As I said, in the olden days, we used to highlight a risk or we used to highlight a problem statement, but we never used to look at areas of improvement. But now it's very, very critical. You find areas of improvement as well as areas which are, as well as processes which are not sufficient to mitigate the organizational objectives as well. Provide advice to management where the response to risk exceed what is necessary. Provide assurance the risk management activities are well designed, coordinated, implemented, and monitored. And in every presentation, I keep saying that internal audit needs to have a deep understanding of the business. You know, even a fresh internal auditor or a new internal auditor, when you enter into an organization to internal audit, it's very important that you need to go on site. You need to understand what the business is up to. I come from a very strong, I would say, manufacturing service background. So I haven't done too much of financial services company. But other than that, whether it be power plant, steel plant, discrete manufacturing, continuous manufacturing, you know, everything else, real estate, pharmaceuticals, chemicals, whatever you call it. I've actually, even when I was a partner with KPMG, I used to actually go to all the sites every time before starting the audit, you know, because every year is a new year. Every year things happen differently. Every year there's some change that's happening. So unless you know what the changes are, you will not be able to add value. Understanding of a business model is very important. Business model typical, as I said, you know, you have the external business drivers. We spoke about the political, technology, social. Always good to get an understanding that, you know, what's happening, and from the CEO or from the legal guy on the political changes that are happening, new regulations that are expected to come, how that can impact your business, who are the new customers, who are the new competition that's entering, what is the demography, how is the economy in various countries where your company is operating. So all this information is very, very relevant. A, it adds up to your knowledge, and B, it helps you do effective work. And then the strategic management processes is always divided into core and support business. Core is always engineering, supply chain, production, quality, distribution, whereas support would be an HR, facility management, financial. So this is a very typical business model. So it has to be customized for your relevant industry or for your relevant business. Okay, so what's in for us? So a few parting opportunities as an internal audit practitioner. If we are, you know, internal audit will continue to stay. It's not going to go away. The third line of defense is very critical, but the way they perform, the way they deliver is going to be different. From a manual, it will be totally automated. From on-site, it could get into off-site, or it could get into hybrid going forward, because now we know things can be done remotely. So you could be a co-source, outsource, or a lone staff internal audit. As an internal audit practitioner, it's you know, one of the low-hanging fruit for us is development of SOPs or model business processes, because we have seen because we are a practitioner, we have gone to multiple companies, so we know what the better practices are. We know what could go wrong, so based on that, we can actually develop model business processes. While at times model business processes typically are done by strat firm or consulting companies, but as an internal auditor, as a chartered accountant, it's right up our alley, and that is something which we should not give up, and we should focus on making a process more efficient and effective. That is something that we can look at. We can do time and motion studies various ways. Cost reduction, absolutely we can do cost reduction, but to do a cost reduction, you need to sort of understand the business very well. Now, when we talk about cost reduction, just keeping a switched off, you know, like if you say ACs will be shut after 6 or ACs will start only 9, that'll automatically save costs. That's not the way of doing cost. That's one of the way, but not the only way. The other way is how you can replace air conditioning with something else. What is there any other alternatives to your manufacturing process? Is there somewhere else you can save electricity? That would be cost reduction. For example, if you're printing invoice 4 copies, where are the 4 copies used? Because so many times you see 1 copy has just been thrown away. Can we reduce it to 3 copies? That's cost reduction. How do you reduce the needs? How do you reduce the consumption? That would be cost reduction. Process mining, development of delegation of authority, very critical. A DOA, a robust DOA needs to be there. Data analytics based decision making, because today there's so much transparency, so much data that's available. And some of these big companies, when you place an order, it can tell you the exact date and the time and the product can be delivered to you, because that sales order is actually linked to the production, which is linked to the procurement. So they know when the material is going to come, whether it's there in the go down, whether it's there with them, how much time it takes to manufacture, what is the priority of manufacturing, all that. A data analytics based decision making can be done. ERM, CRM is something that we can do. Cyber security we can do, because technology, and we need to adopt technology. We spoke about resilience, business resilience. There's business continuity planning. There is business resilience. There's something we can play a major role. Forensic and fraud investigation, development of early warning indicators. Who could be better than us to develop early warning? ESG and sustainability. Again, very hot topics. And we've seen what the World Economic Forum is referring to. ESG, sustainability are going to be critical in the years to come. Okay, maybe we don't have full skill sets on how to reduce emission, but at least we know how to read the requirements and work closely with the technical guy, because the technical guy will be, he may not understand regulations, or he may not understand the process, he may not understand the procedures or the control, but he understands his topic. Was a technical guy. But we need to be a facilitator. We need to work with them to ensure that we get the right data points from a reporting perspective, because ESG system, there's a lot of reporting that's required. So there's opportunities in the coming years for internal audit practitioners is immense. Similarly, if you are working as an internal auditor in the industry, you will find a lot of people, chief audit executive, head of internal audit is a natural progression, chief risk officer. We have seen so many people who started as head of internal auditors now want to become the CFOs, CEOs, CISOs, chief ethics officer, chief compliance officer, head of credit market, commodity forest risk, all that. So the sky's the limit. It is basically for us to decide where we want to be. Today in the morning I was in a session. We were talking about who is the king of the jungle. The king of the jungle is the lion. The giraffe is the tallest animal. The elephant is the heaviest. The cheetah is the fastest, right? But still, a lion does not have any of the skill set, but still he is the king of the jungle. Why? Because he feels that he is the king of the jungle. He believes he is the king of the jungle, and he makes you believe. Similarly, we need to believe in ourselves, and we need to be confident and that we will be able to perform this role. Sky's the limit for us here as internal auditors. So with this, I will take a pause and hand over now to Bindu. And if there are any questions, we'll be very happy to answer.
Thank you, Aditya sir, and thank you for this wonderful, insightful session. And the way you just defined assets, that it is not only the physical assets, the financial assets, the customer assets, then the external assets like our employers, suppliers, and the other organizational assets, that is the values we have. And you also portrayed what is the opportunity and importance of being an internal audit practitioner. And he is like a mentor, he's a guide, he is analyzer, or one, we can say that it is a kind of immunity system or the internal defense system of any organization. So wonderfully said. And the risk of resilience, how we need to be resilient, and what are the risks in being resilient. So all this was wonderfully put. There are certain questions, and I will be taking the questions one by one as they are given. So, yeah. The first question, it may be answered by, I think, any of the speakers. How can Benford law be used to identify bank fraud in the area of advances? This is one of the questions. How can Benford law be used to identify bank fraud in the area of advances?
So unfortunately, I am not from a banking background, so I may not be able to answer this.
Do we have the other speakers also here? If they have the answers.
So similar here, like I'm also not from financial background side, so would not be able to take up this question.
So only thing I would say here is with my role as head of forensic, okay, it's very good to adopt all these laws, but I think common sense should prevail. The more we have to keep everything simple. So while the fraudsters are getting more and more ingenious, I would highly recommend that if I think Kavish's presentation was excellent, and if you follow that process, you really don't need to follow any Benford law or anything else. They're good. You're just making things complex when sometimes, the results that get thrown up, there are so many false positives in all those things. It doesn't work. So I have never used, the only models I ever use for risk management or anything else is a simple SWOT analysis or a PESTEL analysis. PESTEL is nothing but political, it's just acronym, nothing beyond that, and Porter's 5-4 model. These are the three very simple and old techniques which still hold good. Anything you try to make data analytics, if you try to make very complex, the time you waste on finding out false positive is humongous. Not that we have not tried in the past, we have tried various models, but they have never been effective. Go back to basics, keep it simple is what I would say. Whether it's bank or non-bank, I would keep it simple.
Thank you, sir. And the next question is, I have observed fraud while investigating a claim for demurrage charges, leading to diversion of deposit towards custom duty. After the fraud was detected, the person who had admitted the fraud and refunded the amount with interest, which was significant. There is no question mark in the end. Maybe they want some explanation of this. Shall I repeat it, sir?
Yeah, can you say that again, please?
I have observed fraud while investigating a claim for demurrage charges, leading to diversion of deposits towards custom duty. After the fraud was detected, the person who had admitted the fraud and refunded the amount with interest, which was significant.
Okay. So Kavish, if I can go here, I heard that thing. It's just a statement that was made. So I think what the individual is asking is, if once you're caught and then you refund the money along with interest, does that make you immune to sort of any action? Just because you refunded money, do you go back there? Are you a good guy? I mean, if that is the question, for me, the answer is no.
No.
Just because you're caught, you refund the money and you give me interest doesn't make a thing. Your ethics and your integrity is questioned and questionable. So if I was a CEO of that company, I was in the power of making decision, irrespective of that, I would have sacked that person. One other thing I would like to add is, today, a lot of corporates and all that don't like to get into confrontation and all that. So most of these people are let go like a normal resignation. So I have seen a lot of cases when a person actually has been terminated for fraud in one organization, but he goes to another organization. Nobody wants to have a legal battle, right? They said, okay, you're caught, you repaid the money, now you resign and you go. And the same guy comes into some other company and does the same thing again because it's never been reported. So I have a strong concern on that, because a background check is something that should detect it. But in your official records, if he is shown as a resignation, then it's a challenge, because I've seen so many such cases in my organization when I'm working, when I actually pick up the phone and talk to a few people in my contact and I say, boss, this guy was thrown out. But I said, but you have never said that to me in the feedback, nor have you recorded in your organization. How am I supposed to know? I mean, if that was your question, then this is what I would say. It does not, you cannot purify yourself by paying, there's no purification tax here. Sorry,
So
Kavish,
I
over to
believe
you.
I totally agree with Aditya what he is saying, that once you pay back, it does not mean that you're not guilty. So the fact that the person has admitted of being guilty, so that means need to be taken very serious action. Also, like the fact that these days fraud does not get reported in the right sense. I mean, the person does not get terminated. Management takes a lenient view of simply taking resignation and then taking him off. So there's no a kind of a black spot, or those black sheeps are identified in the entire circle of like corporate circles. So unless these black sheeps are identified through termination or through certain legal actions, there is a very good study which has been done by one of the great institutes, which says that only 5%, 5 to 7% of the frauds are really recorded or goes to the legal thing, and legal actions have been taken care of. Otherwise, all the other frauds, either those frauds do not get detected, or once it is detected, also it is being settled of the books. So that's a very serious situation, probably, when yeah.
Yeah. So just to add, if I don't pay my credit card bill on time, so they have the ability to go and report to CIBIL, anything in financial which I do. But as an individual or as an organization, I don't have that ability. While a financial institution have the ability to any of my failures to go and report and sort of screw up my credit rating, I can't sort of report an ethics rating today. So that system is not there. That's why I would encourage people in industry actually to take the right decision, because people suffer later on. It's like removing one monkey from your back and putting on someone else's back.
Right.
Okay, thank you, sir, for that answer. Next question is, what precautions to be taken when frauds are conducted by very senior management, and whom we should confide before investigating that case?
Okay. So in case if certain senior people are involved, that really becomes a very difficult things to handle. So in that case, probably sometimes you need to go and talk to the promoters or the sponsors, like how to take care about these senior employees. Also, you can take a help of the independent directors or like audit committee chair. Go and seek a confirmation from him that in case if you're going for the investigation, what kind of support, or probably you need a kind of external help, maybe an independent evaluator to come in place and get those investigations done. So those kind of things you can opt for. Also, when things comes to a senior employer, senior people getting involved into any kind of fraud or misstatements, it also brings a very challenging factor for the organization with regards to their reputation and with regards to their these things needs to be kept very confidential unless things are identified, people are proven guilty and taken to the whatever course of action which needs to be taken care of. So such things needs to be kept very confidential, since in case if this goes out of your boundary of reportable people, then it can really cause a very big harm to the organization's reputation. It can go into damaging your stock prices or those kind of things. And then probably in case if during your investigation it comes out to be that the allegations were false, people are clean, they are not indulging into any wrong practices, it could be a kind of a business decision or wrong decisions, certain wrong decisions, then it could be a very denting denting on that particular person who you are investigating. So both sides, you need to be very careful, very taking very cautious approach and a very confidential approach towards this.
Right. I would like to add 2 points here. I mean, most of the organizations today have something called a ethics helpline or a whistleblower line or a policy. If your organization has that, you should use that. And I totally agree with Kavish that you have to be extremely careful and sensitive because you don't have the full picture. Because if you're seeing a senior guy doing a fraud, it's maybe your side of the coin or your side of the table. We don't know before you create something like that. So go through the ethics helpline or whistleblower policy if you have, because that will maintain your confidentiality and it will give the ability to the senior management, promoters or the board to actually look at the case and decide whether they want to pursue. So you've done your bit. But the other indication is if you keep doing a whistleblower and you see no action being taken, that means it is with the consent of the promoters of the board as well. That's the second one. Third one, I would say, Kavish, you gave actually a very good example of a Zomato guy eating, and it came on WhatsApp and we deliberated a lot about it. Now, it is only one side of the coin we have seen. We have never caught hold of that guy and asked him what was actually doing. He is also an individual. It's quite possible he ordered his own food on Zomato, which came packed in Zomato and he's eating his own food. But it's that one individual who caught him in camera and then did a viral. So that's the power of social media today, which can, but you're absolutely right. I mean, it damaged Zomato's reputation. People thought, okay, somebody's eating into my food. Imagine the strength, right? So we also as individuals should be careful on what we put. But, one of the technopolar world, which I was saying something is happening in US, it gets displayed here in India and violence gets created in India, something happening in India, people in Europe commenting on it. Those things are going to happen with the advancement of technology. We only have to exercise caution here.
Right.
Thank you, sir, for this answer. Now we have a long question. During one review assignment for finance operations, if before the completion of the assignment, one regulating authority filed a police complaint against the CFO and she is under custody, there is no access to the records of this legal action. What should be the course of action for the ongoing agreed upon procedure? Should this be continued? The CFO is not available to discuss the finding of AUP. Shall I repeat the question?
So Aditya, you would like to take it up?
Yes. So Bindu, if you can just repeat it once again. So what I heard was the CFO is behind bar, and I, as a practitioner, I've been asked to do an investigation, agreed upon procedure report. I have my findings with me, but he's not there to discuss because it's on him. So what is it that we need to do, right?
And also there, we don't have the access to the records and all because the person is not there.
Yeah, so it's a very, very good question, and this actually comes up. As I said, I'm an internal auditor. I've done my certified internal auditing also, and this question actually comes up in the CIA program as well. So if your job is to actually investigate or look into a matter, agreed upon procedure, where there are no documentation available and the person consent is also not there, there's nothing you can do here. So I would actually say no or back out of this engagement. That is what I would do here, because without documentation, without discussing, how will you ever complete your process? Now, again, it all depends on the facts and circumstances of the cases, that what is the agreed upon procedure, whether the audit committee has given me, the board has given me, who has given it to me, what is the relevance of that data. So, okay, prima facie, if the data which is not available because it's with the government and it's in custody of someone and I can't see it, then I will not give my comment, because whatever as an auditor we do or as a forensic guy we do, it's always a fact-based finding, right? We can't be emotional and we don't give opinions. Opinions have to be given by the courts, have to be given by the judge. We only bring out the facts. We don't interpret those facts. That's how it is. Even the police don't interpret anything, right? They go to the court, they take the guy to the court and say that, boss, we saw ABCD, this is evidence. It's for the judge to take a decision. So we don't take any decisions here. So this is how I would be very cautious here to accept as a practitioner.
So you want to add something, Kavish?
Yeah, so I believe what Aditya said is, I agree to him. Only thing is like in case if it has come to an internal auditor assignment as an in-house internal auditor, then probably you really need to go into it, see what are the other countervailing data or information which is available. And you can always reach out to, if CFO is not available, you can always reach out to, let's say, his second line or probably someone else who can really respond or provide those kind of insights into what went wrong and how those things happen. And probably you can definitely need to take care of those pertinent questions. So as to ensure that even at least the management is very clear that what happened, and you can always report back to the audit committee and satisfy them that if something is really drastic, which needs to be brought to their notice, needs to be taken care of.
Thank you, sir. Next question is there any golden benchmark of matured risk management framework?
Right. So there's no mandatory things on a good risk management, but there are guidance in form of COSO and ISO 31000. So COSO framework actually tells you the elements, the 20 elements that you need to follow. So that's a good benchmark or a gold standard that one can follow, simply because there's nothing which a law recommends you to follow today. So something that's there is always better than nothing. So you could always, but you should never adopt it as it is. It should always be customized to your company's requirement, because all of them, if you start doing, you also need to do a cost benefit analysis of a ERM framework also, or any framework that you use for anything. So COSO, a committee of sponsoring organization, and ISO 31000, the international standards of organization. These are the two good benchmarks. Similarly, you have something very similar for insurance, banking. There are a lot of other stuff actually, but these two are the most popular ones, I would say. And you can follow any of those. Yeah.
One question is that, can we put disclaimer to the report in case of non-receipt of sufficient data?
Now, I will answer it from an internal audit perspective. Now, if I am being appointed as an internal auditor by the audit committee, so my job or scope is to give an assurance. So by just putting a disclaimer does not absolve me from my responsibility of giving an assurance to the management or to the audit committee or to the board. So here I have to give, there's something called, in the statutory audit, you have something called a no opinion report. You've got a qualified report. Here I have to say that because of unavailability of information ABC, I am not able to give an opinion. We cannot just review what we can and then put a disclaimer that ABC has been out of scope as a disclaimer and we have not covered because information was not given to us. So this is very clear. Now, this when I'm playing the role of an internal auditor, but if I'm playing the role of a consultant or a consulting type of a role, I'm not appointed as an internal auditor under the Companies Act, but I've been asked upon to look at a process review or something that is more consulting. Then yes, I can put a disclaimer saying that subject to ABCD, this is my report, I can say that. But when it's an assurance role, you cannot put disclaimers and give a clean report. It has to be either a qualified report or a subject to report, very similar to what you have in an external audit or statutory audit.
Thank you, sir. And there is one suggestion that internal audit standards should be made mandatory. This will add IA more effective. So there are not only there are questions, there are suggestions.
So this is for Mr. Nanda to answer, I guess. I know, I totally agree here, because the moment you make something recommendatory, it's always an option, right? So that's a debate we get into it. Like now I'm in the industry, but prior to this, I was a practitioner. I was working in a consulting company. So when I go and tell my company, they say, hey, who's saying it? Then if I say, but ICAI has this, and say, but this is recommended. Recommended means my choice. You make it mandatory, then I'll follow this, so that's a big thing. But yes, we would like a lot of stuff to be mandatory. So I actually support this.
Yeah, I think it's a high time we should actually recognize our institute's standards, and probably these needs to bring as in mandatory, at least probably not all, certain key essays can be like mandatory, and then going forward it could take
Right. Because we are chartered accountants, we are bound by the rules, regulations set by ICAI, but not necessarily all internal auditors are chartered accountant. So internal audit is required under the Companies Act, and if we have to bring it into Companies Act that the internal audit standards have to be adopted, then only it gets the legal sanctity. Otherwise, I will be following it by my colleague, who's probably an MBA or a cost accountant or anybody else who's more competent than me. He is not required to be followed. Then it's not a right level playing field for me.
Right.
Thank you, sir. And these were the questions, and they have requested to share the PPT if it is possible, so that you can do. And thanks a lot for the very knowledgeable and insightful sessions from both of you and Gurvinder Palji. And moving forward, we were expecting CA Gyanchand Mishra ji to give a vote of thanks and concluding remarks, but due to some unavoidable reasons or maybe some technical reasons, he is not here. And it is not only that somebody's presence is felt, somebody's absence is also felt, and I had written something for him, and this is more appropriate now because he's not here, तो ये ज्यादा appropriate हो गया. जो अपनी जुबान से अपनी मेहनत का जिक्र नहीं करते, जो अपनी जुबान से अपनी मेहनत का जिक्र नहीं करते, उनका जिक्र एक दिन सबकी जुबान पर होता है. So this is now more appropriate because he's not here. So we are feeling his absence, and a very, very hearty thanks to each one of you, to the IASB, the Internal Audit Standards Board, and Ambala branch of NIRC of the ICI, the three speakers, Gurvinder Pal ji and Aditya Bhatt and Kavish Agarwal, for giving such wonderful sessions. And see, yes, everybody need to come out of the comfort zone. Though while doing Zooming, in the Zooming sessions, we are comfortable at our homes, but still we need to come out of the comfort zone so that we can share our experiences with others, and so that we get to learn from others also. So these kind of sessions during the lockdown and due to COVID, we all have been so opportunistic that sitting in our homes, in the comfort of our homes, we are connecting with the whole world. And the world itself now, it is a global family. Yes, we are realizing it, that it is a global family. So thank you, each one of you. Thank you, Charanjot Singh Nanda ji and everyone. And we'll be having many more sessions like this. And I believe that anybody who has certain ideas or whatever knowledge we have, we should share it. And this is a very good platform. The webinars and also the offline seminars also are there. So let's have more of it. And I would like to end the session with a very beautiful quote by Christopher Columbus. And I want everybody to visualize this quote, that you can never cross the ocean. Now, we can all imagine that there is an ocean in front of us and water everywhere. So you can never cross the ocean until you have the courage to lose the sight of the shore. So that kind of courage we all should have. And it is not only that when we lose the sight of the shore, there lies the adventure that we can experience in the ocean. So it is not only that there are problems or we'll be facing certain difficulties, but we'll be having a lot of adventure also there. So this is all from our side, and thanks a lot.
Thank you very much. Thank you, everyone.
Thank you, Binduji, and thank you, Nandaji, for providing this opportunity. It was really a very good platform and really a great learning from all of you. My co-speakers has really enriched with the knowledge, and really this kind of forums needs to be there for providing these kind of opportunities and sharing the knowledge and also learning
Yes.
as a part of it. Thank you, Bindu.
Definitely. And the sessions become more effective when they start on time and when they end on time. That is also to take care of that. This is the time management.
Yeah.
Everybody was 10 on 10 on that. I can just assure that everybody was 10 on 10. We still have a few 2-3 minutes left. If you want to say something on the whole platform or anything you want to add.
No, I'm good here.
Okay.
So I only keep saying that we need to take pride in what we are doing, and we need to lead from the front as internal auditors, because sometimes we are looked as a cost function everywhere we go. Now we need to sort of demonstrate and make it profit making. Beauty lies in the eyes of the beholder, so we have to create that beauty amongst us. That's the only parting comment I would give. Being a chartered accountant, being a proud chartered accountant, and plus closely working with Institute of Internal Auditors as well. This is the message I keep giving. Keep upskilling. It's never too late to learn. You need to keep upskilling the thing till the time you retire. You can retire and then follow your other passions, photography, traveling, whatever you want to do. But till the time you want to be active, you need to be relevant. Just keep sharpening your tools, keep sharpening your technologies. Just keep doing. There's no age. Yeah.
Yeah, what Aditya is saying is true. These days, like technology is scaling up like anything, and we, as a chartered accountant, needs to really scale up ourselves, reskill ourselves every time, and every day is a new learning. You should be abreast with the new technologies, new innovations which are coming up, and definitely the entire world is one. It has come on a single platform. Like we are so much connected to each other worldwide that information travels so fast, and everything is available on the click of button. You just use your thumbs and your mind in the right direction, and things will be available to your on your mobile. So that's a good message which probably Aditya has given, that we need to reskill ourselves and upskill ourselves and be relevant in the profession as well as to the world.
Yes, definitely, sir. We need to be relevant, and what I say is that age is just a number on the lifeline. Like we have a timeline or something, and it should be taken care of. We should not see, and we should be a consistent learner, because once the learning stops, then there is no fun in living. So it is like the age is just a number on the timeline which should be taken care of, and we can learn and move forward anytime. And yes, we should be relevant. No matter what we are doing, we should definitely be relevant.
I would just like to correct Aditya here, like living your passions, not after your retirement, but along with your life. So
absolutely.
So all the other passions also to be pursued alongside your regular profession. So that's a kind of a change in message which I want to give.
I agree with you totally. I agree with you.
I also wanted to mention that whatever we are doing, we can include our passion into that, and it will not only, it will enrich whatever we are doing. So
thank you.
Thank you.
Thank you, Aditya.
Thank you.
Thank you very much.
Thank you. Good night.
Good night.